Hey guys, welcome back. Good morning to everyone. Let me know how are you and are you ready for the CPI news? Hey Outlander, good morning, brother. Good morning or good night to you. I don't know, but whatever it is. You can hear me, guys. Mhm. Good morning, brother. I'm in Toronto, Canada. Oh, okay. You're from Toronto. Good morning, good morning. You can hear me, by the way. Hey Islam Fatih, Sharoda, able to hear you. That's cool, man. All good. 11 p.m. here. Yeah, in Australia it's good night actually. Hey, is this good morning? Yes, very clearly. Hey, Suzivan, thank you, man. So you're from Canada. I have the Australian people here. I have the Canadian people here. Turkish people. Oh, hey, cat lover. Good morning, bro. From Morocco. So we have one from the Morocco as well. It's cool. Hey, Ketan. All good. Thanks. Thanks to confirm. Is it good? Which one is good, brother? Oh, okay. It is good. Oh, okay. It is good. Sorry. Good morning, Dolpho. Sound is good. Thank you, brother. I'm not all cool. Good morning, Learn to Trade UK. Learning to Trade UK. How are you, brother, by the way? It's a very sunny day. And I will wait for the CPI. We'll talk about the price action after a little, like 1 minute, after 1 minute. So until the 1 minute, the wishing should keep going. Hey, Ahmed, how are you, brother? Hey, Rahul, Shadanandan. I love your family name, Shadanandan. So good. Hey, Tamimi, good morning. Dima Maghrib. Oh, okay. Over there is a Maghrib. That's cool. Where are you from, Ahmad Ahmed? Where you are from? Good morning, good afternoon, good evening. Okay, guys, it's 8:05. We have CPI around 8:30. Would love to talk about a little about the price action. This is dollar index hourly chart. Now, if you have already watched my weekly analysis video over there, I explained in Saturday actually the price was here somewhere here. So in Saturday, I just told that this order block down close body close candle, it can hold the price, send the price above these two relatively equal highs to take the liquidity. So yesterday market has taken that liquidity when dollar index was bullish. I was expecting that this Nasdaq will fall. This Nasdaq will fall little bit for the liquidity, and let me show you this liquidity. So from 15-minute chart, that was the liquidity. My intention was that market will take that liquidity before CPI. Yesterday, I told clearly three type of things. If market go higher, closed above this new opening gap high, I will look for the all-time high for CPI. If market doesn't take this sell side liquidity, instead stay over here, closed around this area, I will look for CPI. CPI run will go for this sell side liquidity and this parabolic gap. Then we will see if it can go through that. And the third thing I told that if market take that sell side liquidity and this gap hold the price, then around CPI I will look for the bull move. That means CPI will give me some kind of bull move toward that line. So I'm expecting that market will go for that line. Before going over there, the 829 candle can fall or the CPI candle can fall little bit until this propulsion block from the weekly chart. So this is the line from the weekly chart which is actually my propulsion block. For dollar index, it has taken that buy side liquidity by the CPI run. First, it can go little higher to trade that new week opening gap or new day opening gap. When it will go for that, I will expect that this run will fall for this weekly propulsion block. I'm not going to catch that run. I'm just planning to trade. How I'm going to plan my trade. Okay? This is why I'm just planning it for the CPI and rest of the day. Yesterday it has taken that liquidity. Now price is stable. Until here it was like floating, random reversal. I don't like them. Market come here, take that random reversal, relatively equal lows, trade that hourly or strong place, closed here. Yesterday I framed a buy setup over there because I explained this one. I was expecting that. Price came here, closed over there. Simply this gap is holding the price. All I need to see, can market first week down to that weekly propulsion block or not. If it do that, perfect. But overall, I'm expecting the bull move and market will go for that minus 2.5 standard deviation. Doesn't need to take that off. When it will go start to go higher, this guy will go through this daily fair value gap the way I explained in my weekly analysis video. Now is the time to come here from the daily chart. By the way, is that clear or I mean any confusion? Because I can mix it up again and again. Just make sure that it is you got that word, whatever I explained. Did you get it? By the way, clear. Okay, thank you, dog, for telling me that. So everything is marked previously, even before market going over there. We have marked all of these things. Order block from the daily chart, mean threshold of that order block. This specific candle validate this order block. This order block has traded this entry fair value gap. This candle, when it has validated this order block, the next candle trade until the mean threshold of that order block. Closed above this order block, daily order block, tap to this order block. Went through this high, which was our all-time high. When this high has been taken, that all-time high has been taken over here, how far it can reach? Our intention to see that it will reach at least for minus 1.5 standard deviation or minus 2.5 standard deviation. Any of this level can be the reversal point. I told that if it can go through this 1 - 1.5 standard deviation, the way it is going higher, I will expect a retracement, but that retracement is going to happen from that dotted line. I keep saying that look for that dotted line if it can give us some kind of retracement, because after the retracement, as minus 1.5 standard deviation has been broken, 2 is going to give me the reaction or the retracement, not the reversal. It will fall until some obvious level. Here, as you can see, a minus 1.5 standard deviation is working as a support over here. I believe that this support with the first fair value gap from the daily chart is going to hold the price, sending it for minus 2.5 standard deviation as minus 1.5 standard deviation has been broken. This is my intention to see that it will reach for that minus 2.5 standard deviation now. It has done its retracement or the reaction from that 50% of that 2 range. How far it can reach? This propulsion block, weekly propulsion block, or this fair value gap, which is actually our entry fair value gap. Maximum until this gap, market can fall for by the CPI first week, then it will start to go higher for that minus 2.5 standard deviation. It doesn't need to take that minus 2.5 standard deviation, but I will expect it will go like that way. If and only if CPI news has provided me kind of lower run and close somewhere here, okay, then and only then I will expect that market will go for that last fair value gap from the daily chart. So this fair value gap, if the body close by the CPI news, body close below this fair value gap from the daily chart, from 15-minute candle, I'll look for this daily last fair value gap. That is not my expectation, and I really don't want to go for that. If it happens, I'll let this CPI morning session, maybe I'll let this go. In the meantime, if any of you would love to take the sale took the buy, it's up to you. I'm not going to tell any of you to follow my lead or anything. I'm just expressing my understanding. I am expecting market will go for that minus 2.5 standard deviation from the daily chart. Now let's go to the hourly chart. So this is the hourly chart, and as you can see here, in this hourly chart, that was the relatively equal lows here and here. That was the only gap from the hourly chart, which is actually some kind of stable area. So this is the only fair value gap I can give the priority over here. Market went for the all-time high again. This is the all-time high right now, which is my liquidity now, buy side liquidity. Market has taken that liquidity fall. As I told you, if you would love to use the, I mean, like liquidity taken market structure sheet, fair value gap, trade that fair value gap, keep falling. Doesn't matter. If you look for high, low, higher, high, breaker block, no problem. If you look for order block, no problem. Whatever you want to use here, you can use. But the way it has worked, we are just watching it because it is at the all-time high. Go over there, trade this dotted line one more time, fall. Made a huge liquidity over there. After making this huge liquidity, market went higher again, came until this area to finish an unfinished business. What was that unfinished business? Highest up close body close candle is my order block. This candle has validated this order block. Market reached, went back to until this order block one more time, finished that unfinished business. Just let me show you this, then I'll actually remove it. Trade that order block, fall, took all of this liquidity. This last fair value gap is holding the price. From the very high time frame, we know that market should go higher. Why then market made this setup? To take all of this liquidity and validate this buy run by using a fair value gap, which is a obvious fair value gap. Yesterday trade here, I'm expecting that bull run. From 15-minute chart, that was the 15-minute last fair value gap, if you remember, and now I don't need that candle anymore. Market has taken that high, use that new week opening gap as a resistance, fall dramatically, made relatively equal lows. Then yesterday open, traded until this 15-minute bearish fair value gap, made that random reversal, validate by using this fair value gap trading, fall dramatically, took all of this liquidity, trade that hourly gap, closed above the 50% of that hourly fair value gap, last fair value gap. Why hourly chart? Because the 50-minute chart is messy from over there. I have already shown that a lot of time, because this fair value gap I didn't mark yesterday. It was been there from that specific day. That specific day, it was here, that hourly gap. This is today's new day opening gap. I don't want to use it too much chart, as it is too small. But the way it was reacting over there, just because of that, I kept it and would love to see how the CPI is going to work with this gap as well. If it just fall to this gap, then keep going higher, or it will go through this gap and trade until this propulsion block from the weekly chart. What it is going to do? If it is falling dramatically, fall, maybe I'll look for this propulsion block, but I don't want to do that. I'm only interested to think about the bull move. That is my intention. If I get that bull, I will look for that things. At the same time, CPI 1 minute candle, that means 8:30 candle, if it make an fair value gap over there, then the 50% of that fair value gap is extremely important. It can be a bearish fair value gap, it can be a bullish fair value gap, but it will be very important, the 50% of that 1 minute fair value gap. So that's all before the, so what to say, the CPI. I will wait until the CPI to see how this market can be traded. Anybody has any question? Clear, clear, got it. In screen overlay, the name of Tradify spelling is wrong. Okay, sir. Roche FX. I will fix that. Trade. Oh, okay. There is an I is missing from there. Okay. You have a nice eyes, brother. This 930 opening gap on hourly fair gap is traded at 50% reverse to upside. Okay. Is it buy or sell for CPI? Why is that question, brother? Are you going to take that CPI run? Don't do that. It's the biggest gamble ever. Because over there, most of the time your stop loss won't help you. If you take the run toward your side, you are lucky. If you take the run, I mean entry against the side market would love to go, you are doomed already. Your stop loss is not going to help you. I marked it from the top of the body, brother. I mean top of the week. Hey DB, your chart looks different. Yes, I just changed the color. Draw a standard deviation in the propulsion block. No, I didn't do that, Moon. I didn't do that. This is the clear definition of opening gap. Opening gap means opening gap and nude opening gap is different. Opening gap is yesterday's close, that means 4:59 close and today's 9:30 open. There is a gap. So if you go to the I mean this regular trading hour, sorry, I need to if you go to the regular trading hour, you will see that this price is still off. There is no other price. So yesterday's 414, that was the last candle market closed over there, and today's 931 open. If there is a gap, that is called the opening gap, which is the real liquidity void. So that void market always look for at least the 50% of that liquidity void area. This is how we use the opening gap, and nude opening gap is different. That means yesterday nude opening gap is yesterday's 4:59 close and 6 p.m. open. There is a gap which is called the nude opening gap. That is different, brother. Yeah, that's cool. Outline. That's a good idea, brother. 15-minute bearish fair value gap. What I'm expecting, I have already talked about that. DB. Took a trade this morning on oil at the news. Nice 25 points. The school Mark the Shark. I guess we have a news around 10:30, which is actually related with the oil. So maybe you will be able to trade one more time the oil market because we have a news around 10:30, and that's a medium impact news. I use the price action model. I only use the price action model. I only know the price action model. No other model I knows. Brother, I will mark the opening gap, no worries. When I will mark that, you will see that. Almost every day I mark the opening gap. Okay, 9 more minutes to go for the CPI news. Let's see how market is going to trade today. By the way, I have added actually two indicator. one was over there already, that is 8:30 open, and I have added this one actually. How to show you this? Here, the midnight open. So that line is actually the midnight open line, and that is the 8:30 open line. So 8:30 will be there after this. This is from yesterday actually. So those three, and another one is the watermark actually. See this T2 SMC trader, that watermark. So that three indicator I'm using. One is for midnight open, one is for this T2 SMC trader, and another one is for 8:30 open. That is the three indicator I'm using. There is no other indicator. I have to start to use the midnight open. It's been a long, I don't use that midnight open, so I have to start with that because it was much more precise, and I don't know why I stopped using that midnight open for the real PO3. Guys, if you don't mind, you can leave some likes because it's free of cost and a good abbreviation. Sorry, not abbreviation, appreciation. If you don't mind, can you please push the like button? Yeah, 111 people are watching. 111. That is awesome. So just make some more likes. Okay. Thank you for understanding. For dollar index, the way I explained it, please watch the weekly analysis video. You will clearly see that whatever I told here and the way I told it is going to happen. Same way it went over there. And took that exact buy side liquidity request. I mean, respected this constant crossment, but to be honest, I want to see CPI run will first go here to use this area or that volume balance before falling. So that is my intention to see from the dollar index. Mm-hmm. 40 likes now. I'm lucky. Hey Vicky, I'm lucky. Hey Jancy, how are you, brother? 6 minutes to go before the news. Don't try to gamble by the 8:30 news. It's my request, brother. 8:30 news is I called it dinosaur, okay? Like something like that. Dragon, monster. The CPI is kind of monster. Don't try to predict it. If you are in the opposite side of the run, your stop loss is not going to save you. So you will put a stop loss for 200 and I mean $200, and when your trade is gone, you will see there is $2,000 loss. But your stop loss was at $200. So CPI is something that type of run where stop loss can't stop you. Please don't use that one. Hey Mika Abhi, your London session state is very cool today. I didn't see the chart actually. I don't know what happened in the London session, but to be honest, this London session should not be traded. Before CPI, the London session is like a suicidal case. Okay. Hey Jack, thanks for the penguin man, and good morning. Good morning. By the yesterday, I was looking for a 9,100 subscriber, and then I got a subscriber yesterday. I'm just waiting for 4 more minutes actually. 9112. It was like 9111. All was one. Oh man. Three more minutes to go for the CPA run. We'll see. Hey Mag, good morning. Witness of Joshua. By the way, what is your target today? Hey team, how are you, brother? What are you thinking? First up, then down? No, I'm expecting first down, then up. Let's see how many people can guess it. Okay, just make it up and down, because we can see that exactly it's up move or down move. That's how many people are going to guess it. What is your expected run by CPI? Up, down. Which one is your expectation? CPI is in within 2 minutes, so make sure that you have voted before the CPI. We want to see how many people are looking for up and down. Even if you are not my subscriber, you will be able to vote over there. So no worries. 2 minutes to go. Okay, let us know. 1 minute to go before the run. What is your expectation? Okay, 70% is for up. Let's see. There you go. The volatility should come right now because it's already 8:29. 40 seconds. We are waiting for the monster, and suddenly something happened. Like no, nothing. There you go. The volatility nine. Oh, okay, okay, okay. There you go. It was frustrating. It was frustrating. No move. Nothing. I'm not interested about the 50% of that 1 minute gap. As you can see, it's a very small gap. CPI didn't provide us the expectation. I mean, the way we expected, it didn't give us any volatility. You can see just it's not volatility. Even this candle is smaller than this candle. Yesterday's that candle. This one is smaller than that candle. So not interested about the CPI. Instead, would love to see price can keep going higher. Now no plan, brother. Let the price run little bit. Then we'll see. Chart is open in front of us. There is a problem. See this relatively equal lows, this low and that low, they're the relatively equal lows. They're the problem. Can market go? For that I will give the priority to this gap now. Plan is going to come after 9:30 because CPI didn't give me the expected run. Look at E-mini S&P and the Nasdaq. The upper chart is the Nasdaq chart. The lower chart is the E-mini S&P chart. Look both of them, okay? And try to predict that where you should take the entry. I'm not interested to push the button from the CPI as CPI didn't provide me the run I was expecting. From the 1 minute chart, it should be huge volatility. It didn't give me that, so I'm not going to predict the CPI entry. We'll just outline it, but not going to push the button. I'm not going to do that. There is a power of P, maybe. Yeah, excellent. Maybe this is the power of P. So my expectation was the bull move. I got the bull move, but I wanted more volatility, like boom, boom, something like that. It will fall boom like this way, at least until this new opening gap, at least until this gap, okay, and then boom, it will go give me a huge bull move. But it is providing me the bull move without the bear move. That is something I'm not happy, not happy, okay. But the thing is, at least E-mini has taken some relatively equal lows, though it has made another relatively equal lows, I guess, or it has taken it. Yeah, it has made another relatively equal lows. It's something I'm not happy to see. It's going higher is cool, but at least it should take some liquidity before going higher. It would be the best. Is that Nasdaq or is that S&P? Don't forget that today trend is our friend. So that is also something you should not forget. Until now, I didn't get any opportunity to enter. So I didn't outline it. I'm just watching this market. Nothing to do. This one, the order block. We'll see, brother. Who is thinking that there is an entry? Let me know. There is an entry who is thinking like that. I'm looking for an entry. I'm trying to frame and setup. So for that, I need to depend on the price action. I'm extremely bullish. I want to see that market will keep going higher. But in the meantime, I have to think about some kind of lower move. Though it doesn't need to make the lower move. As you can see, it's not random. Market trade the hourly last fair value gap, constant cost might hold the price. Market went higher, made two fair value gap, trade the entry gap one, two, three, four, 5 times, lot of time. Then finally use that new day opening gap, as you can see here. This is today's new day opening gap. Made it support. Now it is going higher. It's okay. Keep going higher now. There is nothing is wrong. But still I have to get that confirmation that really market would love to go higher. For that, I need to see some kind of liquidity taken before going higher. So if it can take the liquidity instead of the lower market structure shift, then keep going higher, perfect. In imminent pay, I want to see that it will trade at least this gap, this parallel gap. This guy doesn't need to until this gap, but when this will fall, it will reach at least until this gap. Then I'll start to look for buy. So this is my whole plan right now. But whoever would love to take buy, sell, anything, whatever you want to take, please go for that. For example, I want to take a sale here. For example, okay. So I'm thinking that this guy will reach until this gap. In the meantime, I'll find some kind of sale here. Even if to take that sale, I need to see some kind of liquidity taken. So at least it will take that high before falling. I want to see that right now. But this all thing has to happen before 8:59. If it happens after 8, sorry, after 9, I won't be able to participate in that price action. So I have 16 minutes left to take an entry. But remember, I'm extremely bullish. Until market make an bearish parallel gap, I'll be bullish. Or maybe market close below this parallel gap. So the gap market has built around the CPI news. If market failed to close below this gap, I'll be extremely bullish. Who took the entry yet? I mean, any of you took the entry yet? Let me check. Okay, 73% people are on the side of the upside. Just 27% people are wrong, but 73% people are were right. Awesome, brother. Awesome. I took long on 8:30. Okay. I took just to pass the eval. Okay. Perfect. So boring CPI. I mean, CPI is almost every time CPI is very exciting. But today's CPI is too boring. Too boring. No volatility yet. Yeah, I know there is a small volatility, but CPI actually provide like 300, 400 volatility range. That is called CPI. But this CPI is too boring. No excitement at all. So far, you can see this high has been taken over here by the S&P, but this high market failed to take that high. See, it's called the fake SMT. Here, if this is the real SMT, then this is the fake SMT. If it is a fake SMT, when even S&P has taken that high, this guy will take that high for sure. This is how we can use the fake SMT as our target as well. Okay, dollar is supporting. Dollar is just taken that buy side liquidity, trade that fair cap again, going for. I believe that it will go through this daily gap and it will reach here the area I have shown you from the what to say the weekly analysis video. It is supporting everything the way I have explained over there. Go and check it. How beautifully it is working. The same thing I told. Dum, dum, until this area. Then I told either this gap or this volume balance. Any of them will hold the price, send it lower again. This one is holding the price. Around CPI, I really wanted to see boom, then boom. It didn't do that. Okay. I have no objection if it doesn't give me something very precise. Wow. Three more subscriber I have gained. Thank you so much, brother, for subscribing. What is the reason? Fake SMT. See, this high has been taken over here by mini S&P, and this guy didn't take that high. So it's called the fake SMT. I want to see that it will take that high, at least that high. So if I would love to take the entry, I will take from that order block, which has trade this gap. Stop loss will cover that order block until this area, very specific area, just to that high, maybe one tick above that high. That will be my entry plan over there, very small scalp, something like that. If it doesn't work, I'll take just 700 loss. If it work, then I'll get like maybe 14 handle, so almost sorry, 12 handle, almost like double. Nobody should close below this line. It's not an entry. Please don't take it as an entry. This is called the observation of the market. Entry is going for this parallel gap. You remember this parallel gap. That is the only opportunity to go for the trade here. But before that, this is all the observation. I'll think like this. So it will tap here. It will take that high. Then it will start to go for that parallel gap. This guy will start to go for that parallel gap. In the meantime, I'll frame a sell setup over there for until this guy reach to this gap. I'll frame a sell setup over here. But this is all the observation. Like if it happened, I could go for this sell now. As it didn't happen. There is no liquidity taken. I am not able to push the sell button right now, even by thinking that this guy will fall for this fair value gap. I won't be able to take that sell here. Either way, I wouldn't go for the sell. The CPI is not expected as I was expecting. But before that, I wanted to say that that high should be taken. I mean, in my opinion, that high should be taken. This is the fake SMT. If this SMT is right, as you can see here, this low failed to take that low. This low has taken that low. That means when market is falling, immunization is stronger. When market is going higher, Nasdaq is stronger. So if Nasdaq is stronger, then Nasdaq should take that high. When the six sister has taken that high, it should go for that high. If this candle could take that high, I would frame my sell from this gap. This candle came here to this gap. I'm in the market until immunization doesn't reach for this gap. I would go for the sell over here. This thing didn't happen. I'm not interested to push the button over there because market didn't provide me what I was expecting. First expectation will work, then trade will work. That is not entry. That is called filling market. I'm thinking this is going to happen, respecting all of this PDRA. If this happened, I'll go for this sell. If it doesn't happen, I'm not going to touch this one. Instead, I will see this one can happen or not. I mean, this guy will trade some fair value gap or something like that. Then this guy will reach for this one. Then it can provide me the buying opportunity or not. So I'll let this whole run go. No entry opportunity for me. Is that clear, brother? as the things didn't happen the way I was expecting, I'm not going to take the entry because the beginning is wrong. The beginning is wrong. How can I believe the middle run? The beginning should be right. So even if this setup work, I don't care. I also know today trend is my friend, though that is going to happen from 9:30, but still this trendy day. Can it actually working like this way? Market has taken this liquidity. Now it is going for that buy side liquidity because trend is my friend and so far it's a bull run. That is also important to see. I don't trade before 9:30, brother. So before 9:30, I don't use the macro. Either way, the macro start from 8:50 to 9:10. That is a macro. Every hour top is the macro. Every hour top. So like 9, 10, 8, 7, 6, 5, 4, 3, 2. Every top of the hour is actually the macro. So what is the thinking right now? It has made another wrong SFD. See, E-mini S&P failed to take that low. Nasdaq has taken that low. So when market is falling, who should take the low? Obviously, E-mini S&P has to take that low. But here happened alter. I mean something different happened, right? Because Nasdaq has taken that low. Now it is going higher. Why? Because there is something wrong. Even S&P should, when even S&P has taken that high, Nasdaq should take that high. So it is going there to make the things correct. After correcting there, if market is bearish, for example, if it is not extremely bullish, then it will come back again to correct this thing. This time it is not only going, it doesn't need to take that low, but even S&P has to take that low. So when going higher, until this guy doesn't take that high, either if you get an opportunity to take the entry from here or from, and now I'm seriously telling, okay, the thing I'm telling you right now, this is the thing. Here I won't be able to push the button, but here I'll be able to push the button around this area. This guy will take that high or not, I don't know, but this guy has to take that high because now she's the strongest one, so she should go higher. It doesn't need to go higher. When it doesn't need to go higher, when it will take that high, then if both of them provide me any selling opportunity, I will start to look for sell from E-mini S&P because E-mini S&P has to take that low. When it will fall, this guy doesn't need to take that low, but E-mini S&P has to take that low because she is strongest when market is going to fall. Do you get it, brother? So from this gap, I'll take and buy. Stop loss just below this gap, just below this gap. As there is a volume balance, I want to cover that volume balance. Target here, that high. I'm expecting that market is going to take. It will go through that or not, I don't care. But I want to see this should take this one here. Now it is a logical entry. Why market has taken that liquidity now going for uh, correct the incorrect thing. So from there to there, that should be my trade. Stop loss, just cover that gap. If it is bullish and going to correct something, it should leave this parabolic gap open as a breakaway gap. The best case of scenario, it will just tap over that gap, then it will go higher. That is the best case of scenario. But if it doesn't do that and keep going higher, that is also acceptable. Made this fake SMT again. So when it will take that high, I will start to think about the sell again. Not here, obviously here in E-mini S&P, not in Nasdaq. This time I can't take the buy from E-mini S&P because it doesn't need to take that high. It has taken, there is no problem, but it doesn't need to take that high. But this guy has to take that high to make the things correct over here. I don't need to push the button every time. I will feel confident, I will go for the trade. When I don't feel confident, I will just feel the market. Not interested to push the button. Instead of pushing button, I'll just feel the market. Is it going to work? If it works, perfect. If it doesn't work, there is no logic to go for that trade. But if market provides you some logic, you should go for that. If it's bull flag, we can target new week opening up today. What is your question exactly, brother? I mean, if it is bull flag means I don't know how to use the bull flag. I mean, if I see the bull flag, I know that that is gonna be collapse. That's gonna be collapse. That's I know. So how to use the bull flag, I have no idea. And I don't see any bull flag over here, by the way. No more entry is valid. It's 9. No more entry is valid. If I'm not stopped out and if market doesn't hit my target, then I should close my trade around 9:20. Exactly around 9:20. Before 9:25, I have to close the trade. What is now my intention to see? This guy will take that. That is my intention to see. Can it fall? I don't care about this anymore. This Nasdaq. I don't care about that anymore. It can come back again to finish its unfinished business now. It can come back again until this gap. I'm looking for a sell here until this low in mini S&P. I'm not taking it. I'm just observing it. Can it now take that low? At least that low. Why is that? Because that's incorrect. It's incorrect, right? When it has taken that low, then it should take that low. But if Nasdaq has taken that low, I don't care how far Nasdaq will go now. All I care, can it fall for that low? That is my intention to see right now. Because Nasdaq is bullish. When market is going higher, Nasdaq can keep going higher as long as it wants. What do I mean by that? Just look at this candle, that candle, and that candle. They're the same candle, 8:30 candle. And then when market reach here around this area, that one, two, three, almost three candle was inside this candle. Look at the next three candle, one, two, three. Already three candle reach until this high. Then both of them support each other, so it went too far. I don't care about that Nasdaq anymore. How far it will go, I don't care about that. All I care, can it fall for this low, at least for that low, and then for this fair value gap. It doesn't need to do that because it's extremely bullish. But I will observe that. If it happens, then around or after 9:30, I will be bullish again. I'll feel bullishness again. Otherwise, I have to wait. The yesterday and the day before yesterday, I saw a lot of your comment. I mean about mini S&P and the Nasdaq. So two chart, SMT and all other things. You have a lot of you has commented. So I didn't reply over there because I really didn't want to open that mini S&P chart. But today I'm going to open it. I'm going to observe this two chart all together. On my right to the bottom, this is the mini S&P 15-minute chart. I have marked that order block. This is the min threshold of that order block. I'm waiting to see can it break that order block level. If it break that on, I will look for that high. Can it take that high? This hourly fair value gap is from even in Nasdaq chart. Okay? So in S&P chart, there is nothing marked over there. Can it break through this 50% of that order block, then start to go higher? Or that 50% of that order block hold the price, send it lower again to trade that buy side imbalance, sell side inefficiency? Can it reach for that area? This is my intention to see right now. But Nasdaq is bullish. Yes, Nasdaq should be bullish because it is the strongest sister. If you think that there can be a retracement, you should think about this mini S&P over here. Well, now, right now I'm not looking for any setup. I have to push the button again after 9:30. Until 9:30, no, I can't push the button. So I'm not looking for any setup. I'm not looking for buy or sell. I'm looking for the market. If you ask me overall, yes, I'm bullish from the daily chart. But from the lower time frame, from 1 minute chart, 15-minute chart, I'm bullish and bearish, both of the things. No, 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 no. It can't be, okay? NQ is sister. I mean, not sister. Your sister, not my sister. Your sister. NQ is your sister, okay? And she's my girlfriend. I love NQ. It is going higher, brother. Your prediction is wrong. I don't care. I have the time. I have the time to think about my prediction, why it is wrong, what it is wanting to do. That's why that this time I don't trade 9 to 9:30. I don't trade in this time. This is the time to feel the market, to observe the market. What is the feeling the market? You will see a setup. You will think about that setup in your mind, not in your chart. You'll think about that setup. Is it going to work? Remember this order block? There was nothing that could tell me that push the order block. That is called pushing the order block and entry and then observe the market. So I don't want to observe the market by pushing the button. I want to feel it. If it works, then I know that I can go for the sell. Then I will start to look for sell. It will keep going higher. I will do nothing. It didn't work, then it has provided me an opportunity to look for that high. What? Market has taken that liquidity. This guy failed, that guy failed to take that liquidity. So it has made some incorrect thing over here. In the meantime, this guy has traded this parabol gap where this guy has taken that liquidity. Something is wrong over here. First, make correct it, correct it. As I'm extremely bullish. So let him correct this one first. Then we will see if it can correct this one right now or it is going to leave this for later. We'll see later. So here, as I'm bullish, I'll keep looking for buy. For the buying opportunity, I found buying opportunity here until this area, but it has reached over there. I don't care. This is the logical level, so it should take that high. I will close my trade over there. It should not break this parallel gap. It should work as a breakaway gap, which is an unfinished business now. Market has to come back again for this unfinished business to finish it. When it will come here, in the meantime, even S&P will take that low. I'll try to catch that run. करे धरते पड़ले मेरी धरते पड़ले मेरी नितम पाखे I'm talking about SMT a lot of time, brother. Okay. Oh, by the way, I got a comment in my YouTube, not my our YouTube, that over there they were talking about the sell here. He was just talking about the selling over there. That was a perfect sell or everything they were telling. Yesterday, before I mean after they start streaming, did I clearly tell that there is three type of today also I repeat that one time. Three things can happen. It can take that liquidity which has happened over there, then it can stay the whole day over there, or it will go for that sell side liquidity. I just remove from my chart, and this is that gap that is going to stop the price. That was the gap which is going to stop the price that I told. So I didn't look for that sell because I knew that all of you knew to look for sell here until the liquidity when market refused to go higher. When it has refused to go higher, how did I know that it refused to go higher? Because there was no bullish parallel gap. So when market actually fall until this area, took all of this liquidity or this area, it didn't provide me any kind of bullish parallel gap. So I should not look for buy. I should keep looking for sell when this all liquidity has taken and body closed below this liquidity with a fair value gap. With a fair value gap. Remember this thing I keep repeating. Around the liquidity level, I want to see there will be body close with a fair value gap. When it has provided you a fair value gap, which is exactly over there, taken that buy side liquidity. Now, this run, to be honest, I won't be able to catch any of this run. The reason is market didn't provide me the entry. I was watching this market. No entry has been provided to me over here. Nothing. If you don't use the, not to say the, uh, what are they saying? Like inversion gap, then otherwise inversion gap, maybe there is no entry. So I didn't find any entry. I knew that this guy is going to hold the price, that gap, and sending the market higher, closing around this area, so that I can predict the CPI news to the level. Remember this level minus 2.5 standard deviation until that level. Is that? Yeah, that is the level I believe. Yeah, that is the level because this is the 50% and that is the level. It will go toward that level so that it can. So I go for that buy over there. Is there anything wrong? Wasn't it so beautiful? I explained this entry. I showed everything in that video I have uploaded. That was the reason to take that buy. It doesn't mean that I didn't knew that market is going to fall. I knew that. I know everything. Ah, brother, it is going higher. It is not giving you any kind of retracement. I don't need the retracement. I'm bullish, extremely bullish. I know that how far I have to go. But if I get the sorry, some kind of retracement that is gonna help me to catch that bull run. If it doesn't provide me that, I'm not able to catch that bull run. That's all. It has reached until this up close body close candle. So let me mark the 50% of that body close candle. This is the mean threshold of that order block. Going to close this one. Traded that mean threshold of that order block from 15-minute chart. This guy still didn't close. So we'll see how this market is going to work. Can it retrace the market from there to until this gap? In the meantime, this cute guy will actually recover the incorrect thing over here. In that type of situation, I will look for some kind of sell. If I look for sell, I will wait to hold that sell in Nasdaq chart until this guy doesn't take that low. If it doesn't, until this guy doesn't take that low, I'll hold the trade. For example, this guy has taken that low, and in the meantime, Nasdaq is just here. I'll close the trade over there. But for that, I need to see the body close around that line from 15-minute chart, which is the bearish order block. The last period that can stop the price, send it little lower to retracement. Not for reversal, for retracement. This whole move started from the nude opening gap. Today's nude opening gap. This whole move started from that nude opening gap, not a random reversal, perfect reversal. just expecting some kind of reaction from that order block so that I will be able to catch the buy move again. In the meantime, I'll cover the sell move as well. This is the plan, okay? I will plan it, then I will execute my plan. Guys, I'll be back within 2 minutes, okay? I'm just coming back. I'm back. This is acceptable. This guy failed to take that high, but this guy has taken that high. It is acceptable because it is stronger, so it can make that is empty over here. Like if this is an SMT, I'll agree with that. No entry is valid before 9:31. So until 9:31, I should keep watching the market. Can it provide me something that is gonna help me to frame a sell setup? Selling is against my trend, so I'm not interested to take sell. But I wanna see some kind of Judas swing, lower Judas swing around 9:30, which is actually the retracement, and then the higher move again. So I'm bullish overall, but before taking buy, I need some sell. If I don't want to take that sell, it's okay. But that retracement, I have to wait for that retracement. I don't look at the previous day low, previous day high as my liquidity or thinking about, I don't think about them. They're the liquidity. So maybe this is the high of yesterday. So if you think that it will take that high, then it will reverse. It can obviously do that. I'm not interested to think like that way. So for me, the previous day high, previous day low is not important in the Wednesday, Thursday, and Friday. In Monday and Tuesday, it is extremely important. But in Wednesday, Thursday, and Friday, previous day high, previous day low, I don't have any value for them. It doesn't need to think about that previous day high and low. It's my opinion again. I need a retracement. It doesn't need to give me the retracement, but I need a retracement. That's all. Because if I get a retracement, I'll be able to catch the buy run. But if it keep going high like this way, I won't be able to enter into this market. So that's why I need a retracement, but market doesn't need to give me the retracement. Yes, sir, I have seen that. Yes, has taken previous day high. As I told, it's not important to me at all. The previous day high, so it's not something like it has taken the previous day high. Now it is going for the previous day low. No, it has taken the previous day high. It will keep going higher to take long time ago days high or week high or month high. Everyone, it will go for that. I think like that way in Wednesday and Thursday and Friday. These 3 days, I have no intention or no business with other days highs or lows. They are useless to me. For me, I can't take any entry before 9:30. But in the meantime, if any of you would love to take any kind of entry, please go for that. I am not able to push the button before 9:31. At least before 9:31, because it's absolutely gambling. I don't want to gamble over there. No entry is valid for me from between 9 to 9:30. Guys, can you please make it 100 likes? I just need 18 more likes. 173 more people are watching. Give me 18 more likes. Make it at least 100. Hello, Rakesh. How are you, brother? Some of you actually tell me, give me some direction, okay, for some like go 1 hour chart, check that breaker block, or maybe go 15-minute chart, look at that order block, okay, something like that. Please stop doing that. Don't give me any direction. If you start to give me the direction, I will start to give the value of your opinion, and it's gonna affect to my reading price action. So stop giving me any direction. Don't give me any kind of direction. Don't tell me to go somewhere else. Where I'm staying, I will stay over there. If I need to go anywhere else, I will go over there. And when I will do something, obviously I keep explaining them. So stop giving me the direction. Okay, Oji, I told that I'm not interested to push the button between 9 to 9:30. I don't trade over there because the price is not precised over there, so I don't want to trade over there. If you go for any trade, please go for that. Just don't tell me that, because I don't feel good to push the button between 9 to 9:30. While I know that it can be, I mean, most of the time it doesn't work. So it's kind of like taking a loss by intention. I don't like that one. Instead, I will go for three losing trade out, I mean, inside of my session, where I will be able to push the button. I prefer that one rather than taking a winning trade inside this range where I know it's gonna be a losing trade. I cook the prawn fish with what does it called? Full copy. We call it full copy. Actually, what is the English word of that full copy? Flour something. I forgot actually. Uh, like that is kind of vegetable. So prawn fish with the vegetable with rice. Yep, that is the word. No, I'm not thinking that it will go to the new week opening gap. I'm thinking it will go through the new week opening gap. So the new week opening gap is not going to hold the price. It is going through that new week opening gap and it will go for that minus 2.5 standard deviation. Is not expecting that it will touch that minus 2.5 standard deviation by today, but will go toward that and it will close to the top of this new week opening gap by today. If the 930 doesn't send the price lower below that fair value gap, which has created around around 830. Absolutely, Sachin. That is the that is the thing, brother. To be honest, it was delicious. It was delicious. Okay, I don't know why, but it was so tasty. I was feeling this is the first time I'm cooking actually in my life, but it was too much delicious. Both S&P and Emini Nasdaq has taken that high. So let's see if it can fall now. The guy who asked me about the opening gap, how to mark the opening gap. See how I'm going to mark it. Okay, I'm going to remove that order block line. It's kind of thing. You will go to this area in regular trading hour. In regular trading hour, you'll come here. This is the last candle. See this candle? This is the last candle. So what I will do, you can mark a box. I actually mark it like here. This is the last candle close. And today market is around here, right? Sorry, market is around here right now. Yeah. So I will see around 9:30 open. How the 9:30 is going to open. Then I will mark the 9:30. Okay, I will actually keep it over there. Then after marking it, I'll go to the electronic trading hour. I don't know how to make it. I'll see. I'll look for that. Okay. I really don't know how to increase the intensity of the crossbar. But I can see your this comment. My chat is going disappear again. I can read it. So this is the opening gap. So that is the low. That zero is the low, and this is the opening gap. Okay. I have marked the opening gap. Now I will go to the electronic trading hour again. This is that opening gap. So from there to there. This is yesterday's close. This is today's open. I prefer to market reach at least for the 50% of that opening gap even before going higher. So that is my intention right now. So I'll look for a sell according to all of the analysis I have done before until this low. So I'll mark that low over here. That is my target for E-mini S&P. But when I'll go for sell here in Nasdaq, I'll close the trade when E-mini S&P will take that low. Okay, when it will take that low. In the meantime, I have an idea that market is coming for that unfinished business and for that 50% of that opening gap. All I need an entry opportunity over here. If I get an entry opportunity, I'll go for that. If I don't get it, I'm not going to push the button. I'll keep watching. Without any kind of retracement, if it keep going higher, I will not touch this market because that is called chasing price. I don't want to chase the price. My overall bias is bullish. I'm bullish. But before bullishness, I want to see some kind of retracement in lower side. For E-mini S&P, that should be the sell side liquidity. And for Nasdaq, there is an unfinished business here and the 50% of that opening gap. So that is the target for Nasdaq. For E-mini S&P, at least until this liquidity, until this liquidity or at least until for this fair value gap. I want to see this for E-mini S&P. Uday Thakur, I am not a politician. I can't save them. I can't save anyone. And so far, I know that the minority in our country, they're safe. They're more safe than India. So I think there is some rumor actually. I don't know. Oh man, you guys are awesome. I just changed the background color and nobody appreciate that. Can I keep this? Can I keep this? Not good. Oh man, it was cool. Okay, to be honest, it was cool. What was that? I guess it was. Which one was that? I guess this one. It was that. Is it okay? Now okay. Okay, then I'll keep it. Okay. Remember, as I told, I mean, if market keep going higher, I will have no opportunity to trade in this market, and I will not go for that. This entry, that entry is not something that is the first time I took. The last fair gap reaction from 15-minute chart exact from the consonant crossment. Something I have already explained a lot of time. Let's see. Mm, thank you. Outlander, I forgot that. Now, this is not actually according to me. I guess this is also according to ICT himself because there is no other fair gap. Yeah. Not going for the first presented gap entry today, but we'll just observe it. Either way, can it provide us 25 handle or not? So first thing is it will tap to this gap, buying opportunity for 25 handle. So something like this here for 25 handle, just for 25 handle, something like here. The stop loss is going to be below that candle which has made this parallel gap. So over there, not going for this trade for today. I'll just observe it, nothing else. Okay, actually it will be from there to the top of this gap here, and the target is here somewhere. This is just the first presented gap entry. Okay? So you know this entry we went for yesterday for this entry we got near about 4800. It was awesome, and previously we got 1500 loss. But it's okay. Let's see if it can provide us 2500 today or not. I'm not going for that. I'll just go for the price action entry. But this is a legendary invention. Don't say this is very small. It is a legendary invention. Okay, and I'll look for the 20 handle as well because sometimes it reverses from 20 handle until that 20 handle. So the first presented gap entry is something absolutely different. I'm just not going with this trade. I'll just observe it. Can it provide us 25 handle at least? Sorry, at least 20 handle, maximum 25 handle. Would love to see that. Okay, so 20 handle has provided already. I'm going to remove this one. Now I'd love to see can it provide me 25 handle. The first presented gap 25 handle. Can it provide me that or not? There you go. That's why I told that I'm gonna make the history. How it is going to work? Either way, if it doesn't work this way, then it will work that way. Either way, it is going to give me 25 handle. If it doesn't work this way and I got stopped out for 17 handle, then I will not going to close my trade around 25 handle. Instead, I'll start to look for at least 30 handle, which is going to be provided 90% of the time. More time, okay? No price action, nothing. You need nothing. Just need to mark the first presented gap. For the first time, it will tap to this gap, go for 25 handle. If it doesn't work, stop you out. The body will close below this fair value gap. Even if it doesn't hit your stop loss, close the trade. Take inverse entry for 25 handle. As it has provided me this way, I'm happy for that. I don't need to bother about any more time for this gap anymore to take the entry. Already got to boom by today. You know what I'm thinking? All of you know that, right? Because if it doesn't give me the retracement, I won't be able to participate in this bull run. My bias was bullish. I was bullish. My weekly analysis video, what's that on? I was bullish. Yes, from yesterday, the day before yesterday, I was bullish. I was bullish. I was bullish. I was bullish. But minus 2.5 standard deviation. But I won't be able to participate in this price action if and only if market doesn't provide me any kind of retracement or the liquidity taken. Without liquidity taken, I won't be able to participate in this run. No buy is valid below the new week opening gap low. Low means exactly from that area where the distance between new week opening gap low and the price is like 15 to 20 handles, something like that. No buy is valid from that area. Guys, in a day, two winning trade one after another. Do I need anything else? I don't think so. Forget about the CPI entry because that entry was not that much strong. But this first presented gap entry, how does it look like? I love it. Just observe this thing every day and count how many times you get the winning trade. I mean, how many losing trade you got, how many winning trade you get. Even if your losing trade is bigger than the winning trade, you will see that if you just use this first presented gap the way I have explained, at the end of the time, you are more profitable than you have losing. You have lost the money. Comparing with that, you will get that more profit comparing with the loss. Observe it and then push the button with confidence with your real money. But before that, please observe it. Everything I have explained how to use that first presented fair value gap. You just need to follow them. That's all. It will go for 100 handles. I don't care. 25 handle is more than enough if it is the first entry. More than enough, brother. If you have more than one contract, maybe then you can take a partial around 20 handle. Then you can hold your trade as long as you want. Okay, 191 people are watching. Can you push the like button little more? I mean, little more likes, if it is possible, obviously. As I told, if it keep going higher, I can't participate in this price action. If you want to participate, please go for that. I'm not interested to take the entry over here because it is going higher. It is one-sided. It's called chasing price. I need some kind of manipulation. If no manipulation, no entry for me. This is an buying opportunity. When you tap to this new week opening gap low, this is an buying opportunity. But I won't be able to take that buy. The problem is my stop loss has to be below the new week opening gap here. There is a gap, I guess, here. Okay, it was actually cool. 19 handle was not bad. I could go for that. Target is this last fair value gap low, just that low. This is the first fair value gap or the entry gap. This is the last gap. Remember, SK, you asked me and I told that I'm gonna explain this. You did something wrong, so don't forget to take the notes. First fair value gap, that line, something like that. I could go for this entry, but I thought it will be like 30, 35 handle stop loss. But I saw it's just 20 handle stop loss. So it was a logical entry, but my assumption was wrong. I thought the stop loss will be 30 handle, something like that. This is the last fair value gap from the 15-minute chart. We'll see if it can hold to the price. No sell is valid. No sell is valid above the new week opening gap high. No buy is valid below the last fair value gap. I'm expecting a reaction from that last fair value gap. Let's see if market can provide me a reaction. The same reaction I took last day PM session. Same reaction I'm expecting from here. Let's see if it can provide me any reaction from below the 50% of that last fair value gap. Then I'll go for that sell until the top of the new week opening gap high. Which is a counter trade entry. You should not take that on. If the stop loss support you, go for that. Otherwise, don't go for that. Market is one-sided. It is just going higher. It's just going higher, going higher, going higher. I don't need to chase the price. I am not interested to chase the price. Everything is in front of you. Okay, look at this 15 minute. I mean, sorry, this immunity chart and look at this Nasdaq chart. Both of them is in a logical level. This is also bullish from dollar index, very bad sign. When they are bullish, he is also bullish. It's a very bad sign, which is called high resistance liquidity run or no entry run. But you will get the run, but there is no entry opportunity. Hey guys, if any of you are new over here, don't forget to subscribe to our channel and don't forget to let us know about your doubt if you are new. But if you are with me for some days, then you should have no question. At least for 1 week. If you are with me for 1 week, you will have no question because every day I'm showing you the same thing, same thing, same thing every day. Whatever is happening, we have already outlined it in Saturday. Please watch the weekly analysis video. You will get the full idea of this week, how far and how you are going to trade over there. This is an unfinished business. Market left that full break, I mean opening gap. Really weird. Really weird. If this candle close above the consequent crossment of that last favorable gap from 15-minute chart, I will not look for any kind of sell. Even if market fall a little bit, I will start to look for buy. But no sell is valid for me. I will look for sell again if 15-minute candle can close below this new week opening gap. Then I will start to look for sell again until this guy take that that liquidity. If it keep going higher, I am not going to touch this market. No, sister, it's not going to take the all-time high. It's going to take that line. That is the line it is going to take. It doesn't need to take it by today, but it is going toward that line. At least until that line, then we'll think about the sell move. As I told, please watch the weekly analysis video. I have already explained everything from Monday to today until this area. Everything has been explained already. So please watch the weekly analysis video after this session. Please watch that one. It's for your good. Trust me. You will have an idea how to frame the whole week plan in Saturday and Sunday when market is closed. You will learn it. I promise. Nabil, I don't use 5-minute chart, brother. So I don't know what about that 5-minute parallel gap. This is that all-time high super. Just don't forget about that line. This line is here for long time now, and it's bored. If there is no fair value gap, I'm not going to take that entry. Stop loss is for 15 handle. Target is this 33 handle. In this 24 handle, I'll try to take a partial. Out. Hmm, not only closed above the last fair value gap, but also, last fair value gap constant and constant, but also closed above the last fair value gap. Honestly, this is gonna be a, fake breakout, because if it is the breakout, then I will miss every single run. Market will go for that area. I will miss every one of them. I need the correction. I need the correction. If there is no correction, I will miss every single opportunity to trade today. I need the correction before taking that all-time high. Because the all-time high has taken, I should look for buy, which I am not able because market didn't take any kind of sales and liquidity. So I need a sell. That's all. If you need to look for buy, please go for that. I don't go for the buy. I'm not interested to look for the buy right now. I need the sell now. There is no correction. There is no entry for me. If it keep going higher now, I'm not going to push the buy button. I won't be able to do that. Market has taken no sell side liquidity, nothing. So I can't look for the buy over here. If any of you would love to go for that, please go for that. It's a very nice opportunity to look for the buy, I guess. But I can't take that buy because I believe that market should fall for the correction. I wanted it before taking that all-time high. It has taken that all-time high. So just need to see how this 50-minute candle is going to close. If the 50-minute close above this fair value cap, maybe I won't be able to look for any sell anymore, any buy anymore. I'll be like stumped over there. No buy, no sell for me until the correction. After the correction, I'll look for the buy again. But if this candle close inside this fair value cap, I'll look for sell again. When market will close below this fair value cap, I'll start to look for sell again from the breaker block. In the meantime, whoever would love to go for the buy, please go for that. I don't want to chase it. Again, my bias is bullish, but I can't take the buy. This is the problem. Until this line, I'm bullish, but I can't look for the buy as market didn't take any liquidity. So let this go. I have no other opportunity to trade. I can't look for the buy until the correction. So here I have just two options. Either when market will go for the correction, I will let that sell go, or I will go for that sell and I won't prefer any buy anymore. After the selling, I won't take any buy because there will be no time. If it keep going higher, I will let this go. I have nothing to do in this one-sided market. No manipulation, no entry for me. Remember, as I'm not looking for reversal, so I don't need the 15-minute bearish parabolic gap. I'm not expecting the reversal, so I don't need the 15-minute bearish parabolic gap. And I don't need any line for reversal because every single line is an important level. It can reverse from any line because this is the all-time high. See this correction? I wanted the same correction in Nasdaq, but it's too far. But I didn't need that far. I was needed some correction. I don't have any lower low. Can you see Jack? I need a breaker block. For example, high, low, sorry, low, high, lower low. I need that lower low, but this is the first time I get the lower low. Low, high, lower low. This is the first time I got that lower low. If I mark this area, the standard deviation won't cover here. I can't mark the prediction. I can't go for here. From 15-minute chart, 15-minute chart also doesn't support that, I guess. No, it doesn't. Yeah, it's until that area. Let me check the hourly chart. I don't think so. There is something from hourly chart as well. Depend on this candle close. Okay, if this candle can close above this minus two, then it has possibility to reach at least until this line, until that line. But if this candle closed below this line, obviously from the hourly chart, not from the any other chart, if it can close below this line, then this is and that dotted line, they're the same. It can give me the correction, this area. If it closed above this area, that means this is the next line. It will go, at least it will reach for that. But this line has the power to give the correction from the hourly chart if the hourly candle doesn't close. So you can expect the correction from this line, that line. That means any kind of selling opportunity from that line is valid. From higher time frame, this is the line where market is reaching for. That is the line. Not that one, sorry. This one. Minus 2.5 standard deviation, which is actually 21881.00. This is that exact line where I'm expecting market will reach at least until that area. But before reaching over there, it should give me some correction. If it provide me some correction, I will be able to catch that buy move. Otherwise, I won't be able to participate in this price action. I saw this market structure shift. I mean, there is a market structure shift. I saw that. That was the fair value cap I'm watching. Can it reach until this area? It didn't reach over here. That doesn't matter. I'll use this inverse cap actually to take myself. But I was observing this low. I mean, this candle can trade that fair value cap or not. It didn't trade it, so it's okay. If this candle can close one tick below this fair value cap, I will take the entry from that inverse cap. But it has to close below this gap. It didn't close. Okay, so maybe I'll miss this trade because it didn't close below this gap. I'm not going to use this gap as my inverse gap to take the sell because it didn't close. If it closed one tick below that area, this candle I'm already in the market. Yeah, I know that's the crude oil news around 10:30. Crude oil doesn't provide us any kind of volatility actually. I didn't see actually. So yeah, you can wait until that area. That is a medium impact news, but I really don't see any effect here in this chart by crude oil. Never saw that. So dollar index should provide me some kind of lower run. Yeah, it is providing the lower run because they are one-sided. I'll close my trade before tapping over here. If this guy take that sell side liquidity, then I'll close my trade even before tapping over there. There is a gap, a small gap. I'm just observing this gap. Can it go through this gap or not? Because this is the only thing that can stop the price. And I can be wrong just because of this gap. So all I need to see, can market go through this gap or not? I have to take this risk because if I miss that risk, I mean, if I wait for the confirmation, then two things can happen. Either I will miss that trade or market will retrace from this top of this last five lookup from 15 meters. So either way, I won't be able to look for any kind of sell over here. That's why I had to take this risk to predict that this is gonna be broken and market is actually falling. I have to take this risk. Okay, so there is no other way for me without taking this risk. Stop loss is near about 19 handle. Really afraid of that stop loss. It's big stop loss. 19 handle stop loss is huge. I wish it will be able to break that last gap, as it should make some correction. It should do that. Stop loss is above the candle which has validated this inverse gap. This is the candle. First time it has traded this gap, then this candle, and then finally this candle has made this gap as a valid inverse gap. So my stop loss is one tick above that candle which has made this gap valid. Can't move my stop loss right now. I have to wait for the run, at least the run that will go through this gap, last gap. If it can go through this gap, then I'll be able to move my stop loss. Until then, I have to wait because this candle can trade little higher on more time and then fall. So I have to be careful about that. Nobody closed above the inverse gap constant crossment. This is the best thing right now. If the candle can close below this parallel gap now, I'll move my stop loss above that high. So this is the order block right now. If this candle can close below this, I'll put my stop loss over there. Around 10:30, I'm expecting the run toward my side, toward my direction. So here, my stop loss will be there, six candle. Okay, if this candle can close below this parallel gap, then stop loss will be compromised by six candle. Three, two, one, zero. Okay, it didn't close yet, so I can't move my stop loss. That parallel gap should be broken, otherwise I can be wrong. By the way, in the meantime, if it actually take the partial, I'll put the stop loss break even. Just put the stop loss break even because it's not a small profit, it's a huge profit. Like 26 handle, not bad. Either way, I'm gonna move my stop loss here after closing this candle. If this candle doesn't close below this parallel gap, my stop loss will be there. I'll take that loss. I have no other way. 12, 11, 10, 9, 8, 7, 6, 5, 4, 3, 2, 1, 0. So that is my stop loss right now. Just compromise the stop loss because market should not go above that high, which is a perfect order block right now. Yeah, it can trade this parabolic gap now before falling. There is nothing wrong. And this is the 10:30 candle, which should give me the move. If it doesn't give me the move toward the downside, I'll get a stop out over here. That's all. You can say that I trail my stop loss too fast. That's my habit, and I love to do that. It helps me to avoid a lot of losing trade. So I trail my stop loss too fast. Because this high is now valid for market structure shift. As today is the expansion day, what can happen? This is the liquidity taken. Now market is going higher. It is also possible. So I don't want to see that market structure shift over there. If it provide me the market structure shift, there is no value to look for the sell anymore. I should look for the buy. So why I will put my stop loss over there? Instead, I'll put my stop loss over there because that high should be protected. So for this is the fake breakout, and as you can see, it has been respected from that 50-minute last parallel gap to the top exactly. It is possible that market will reverse now from there. It is also possible, but I wanted to see it will go at least until the 50% of that last parallel gap or something, so that I can take that partial over here. That candle high should be protected. That high should be protected. Market should not violate that high, because if that high is violated, then there is much more possibility that market will keep going higher. I don't want to get chopped up over there. So my stop loss is just one tick above that high. Another candle close below this parallel gap, my stop loss is to the break even. At the same time, this highest up close body close candle, not only that on, all of these are the consecutive order block, all of them. on the consecutive order block. The highest one is the most sensitive one. Is the most sensitive order block. So let's see if this order block can hold the price and send it lower again for our target, for the correction actually. I'll take the buy here. According to the price action, it has taken the liquidity market structure shift fair value cap. If it can make or not make, I will go for the buy actually. Here, stop loss is covering that candle, this candle, which is the order block. Going for the this line, I'll go for that line now, which is the -1 standard deviation, sorry, -2.5 standard deviation from the hourly chart. That will be my target. Here I was fully aware of that, but the problem is I wanted to see that it will reach at least until this constant enforcement. But it is a logical level for reversal. And as I told, today's trend is my friend. It has taken that liquidity, gave me the market structure shift, just took the entry from that reclaimed fair value cap, covered that order block here. Just willing to see if it can go over there. In the meantime, maybe I will take a partial. Where can I take the partial? That's just two and real. Around 30 handle. Yeah, around 30 handle. I will take a partial over there. Wanna see an unfilled gap over here. If it can make an unfilled gap over here, it will be extremely bullish. That is the best case of scenario for me. Today I'm trying to catch the partial long distance, but to be honest, I don't do that. But yeah, today I'm just trying to catch. Even the partial is for 30 and oh man, my target is 25 until maximum. But yeah, still today I will try to catch the long run if it is possible. I wanted to see an unfilled gap. That doesn't mean that market has to make the unfilled gap. I wanted to see this will be unfilled. If it was unfilled until this line, I'll be very confident to hold the price. That means I would trail my stop loss slowly. But as it didn't leave it open over here, I'll be very careful. When it will go higher, I'll trail my stop loss too fast, something like that. I'll keep doing that. To this specific setup where market has taken that liquidity market structure shift, this is the entry fair gap where I should take my entry and my stop loss should cover that breakaway gap over here. You can see there is another gap over here, which is actually the breakaway gap to that specific perfect setup. What the here? This is the low of that gap. Sorry, high of that gap. This is the low of that gap, which is called the breakaway gap. So even if it wants to trade, it should leave the 50% of that gap open for the breakaway gap. This is gonna be my order block to that specific setup. If the candle can close above this candle, it's gonna be my order block. When market will close above that. If it doesn't close above that, no order block. This time market has provided me like 24 handle. I don't like to stop taking my partial. My love area to take the partial is 15 to 25 handle. Today I'm just trying to catch the big run. That's all. So until this area is 53 handle. My trade is done over the 30 handle. Around this I will take the partial. This is my closing of the trade. That should be my partial, and this is the closing of my trade. Today I'll go for the big move. I need the speed now. Toward the upper side, I need the speed. This type of Mickey Mouse move is difficult because remember this line, that is the 50% of that standard deviation. So if this line hold the price, there is a possibility that retracement can happen. So I need a speed toward that area so that the hourly candle can't close below this dotted line. See this dotted line? That is the 2.5 standard deviation dotted line, and there was some kind of minus 1.5 standard deviation. I don't want to see this candle close below this dotted line. If it close below this dotted line now, then there is a possibility for the retracement or the correction. So I need the body close above that dotted line. That's all I want to see right now. And the mean threshold will be here somewhere, just below that dotted line. There can be the mean threshold of that order block. I'll put my stop loss to the break even because I'm not feeling good hold this trade. The way it is respecting this dotted line, I don't like that. So I'll put my stop loss to the break even without the price action. If it doesn't go higher, I'll get a stop out to the break even. Because I need the speed here. As it doesn't providing me the speed, I'm not happy to hold that loss over here. So I'll put my stop loss to the break even. If I get okay, I got a stop out to the break even, I'll be happy. Because the way it is respecting this area, I don't like it. This dotted line has the power to give me the reversal. I'm in choppy situation right now. Still now I wouldn't get a stop out because my stop loss was below that candle. Let's see. Sometimes it's just a feelings to hold that stop loss too long. Like right now, it was my feelings that when I need the speed here, market is not providing me the speed. So what is the reason for holding that loss? I don't think so. I should hold that loss. So I put my stop loss to the break even so that I can get a stop loss to the break even. Here the same thing. I wasn't feeling good to hold my stop loss until that area. As you can see, if my stop loss was there, for example here, it would just stop me out over here and then it is falling. Today's price was good, but without any entry opportunity. If it failed, this guy failed to take that low and closed above this parabolic gap again, I'll go for the buy again. Before taking that low, if it can close above this parabolic gap, I'll go for that buy again. This is the origin of the setup. Market has taken the liquidity, market structure shift, parabolic gap, market trade that parabolic gap should going higher. It reached until this area. I know that my stop loss should be below that low. As I wasn't able to do that, so I put my stop loss over here. Then I trailed it, that is different matter. But I stop loss I put over there because my stop loss was not covering that low. When I get stopped out, I would love to see that can it take that low. If it failed to take that low, instead of that, if it can close above the entry gap, wherever it will close, I'll go for that buy. Wherever it will close. But it has to close. But if it close here somewhere, then obviously I'm not going to take the buy. And very near to this gap, I'll go for that buy. This time stop loss should cover that breakaway gap. See this breakaway gap? It should cover that breakaway gap at least. If it is possible to cover the low of that candle which has made this breakaway gap, that is better. But at least the breakaway gap should be covered. Target will be the same, I guess, that area. In the meantime, I'll take the partial. Origin setup. Forget about this inverse gap. This is the last gap over here. This is the entry gap. Price closed above this entry gap, took that buy, will cover that last gap only, that last parallel gap only. This is the order block. I think I should cover the min threshold of that order block a little bit. Here, let me check the order block min threshold. This is the 50%. It will be too much. It will be too much. Yeah, I can't cover the min threshold because the stop loss will be bigger somewhere here. It will be bigger. 22 handle. Okay. 21 handle is okay. So let me mark a line here. There. So that is the min threshold of that order block, lowest down close body close candle. This is the order block low. This is the min threshold of that order block. It doesn't need to trade them, but if you trade them, it's okay. Now need speed toward the buy side liquidity. My heart is pumping now because it's a huge stop loss. If body close below, I mean, if even if the wick go little lower of that mean threshold, I'll get stopped out. So my body is pumping now. The heart is pumping now. You should not go below that mean threshold. You should respect that mean threshold of that order block, and you should go higher. It's kind of situation, a very tight situation. It has to respect that mean threshold tick by tick. If it doesn't respect that mean threshold tick by tick, I'll get stopped out. Even if it go higher, I won't be in this market. So my heart is like tight situation right now. Go and close out the order block. Go and close out the order block. Don't give me a mini heart attack. Just close out that order block. One tick above that order block. Perfect. Now I will put my stop loss below that candle which has traded that mean threshold. As it has closed above this order block, it should use this order block and the last gap as a support for going higher again. At least this to any of them. It doesn't need to trade that mean threshold one more time. So any of them should hold the price, send it higher again. If it comes for that, there is a much more possibility it will fall for maybe this parallel cap one more time, or maybe for this order block which is unfinished business over here until that area. So I don't want to see that body close any of this level. Any of them should hold the price, send it higher again. Not good. I'll get stopped out maybe. By this candle, I'll get stopped out. Now, when you will fall, then why you go over there? I hate you. That's a big loss. It is retracing from that 50% of that minus 2.5 and 1.5 is standard deviation. Retracing from there. In the meantime, just stop me out for two times. I hate you. This run, if it could happen over there, I would get profitable over here. It didn't provide me that. What a shame. That loss was just, I mean, unbelievable. It was a huge loss. 21 handle, more than 20 handle. I feel bad for that. It didn't even given me any opportunity to trail my stop loss. I wanted that sell, but here, not from there. Why did you make that sell from there? See, my expectation is gonna be expended, but I mean, sorry, executed. But that move just made me wrong. Think about everything. Why did it made that move? This small move is just awesome. Just fully stopped me out to take the sell. Actually, I should have gone for that partial maybe. I don't know. Minato, it's just a reaction, just a reversal or the correction or something like that. I know that, but I was expecting that from the inverse gap. Why it didn't go like 2 to 3 handle lower? Just a bad luck. That correction is obvious and it is happening from that 50% that dotted line. It is also cool. Everything was cool. Just that small run stopped me out. I just changed everything. That small run forced me to look for buy, where I should be stayed with the correction. As I told at the beginning, I should not go for the buy. I should not go for the buy. I don't know what happened to me. Then I started to go for the buy. I should have waited for that correction. Maybe I was in FOMO, fear of missing opportunity. I guess, and I got punished. Yeah, I learned a lot. I should wait for my thinking. The way I was thinking, I should hold that thinking actually. I don't know what happened to me. I was expecting that fall, but when I saw this run, suddenly I started to think about the buy because I saw this low has been taken over here, but I didn't notice that this two low has made the relatively equal lows. How did I made that decision? I don't know. Sometimes shit happens. Jack, it's true, man. It's absolutely true. I mean, when we take the losing trade, we don't hear to ourselves. We don't give a shit to our, I mean, what to say? I mean, inner person. We don't listen to them. This sells a liquidity. If I go for the buy now, it's absolutely a gambling because it left that liquidity. The same thing over here. Though it has taken that low here, but left that sell side liquidity. Should I look for a sell? 100% no. Now, can't I look for buy? Can I look for buy? I can't look for the buy as well because market left that sell side liquidity. And this hourly candle is respecting this minus 2 standard deviation. This is the minus 2 standard deviation. So it can provide me the reaction. That reaction will send or the correct the market. Remember the that dotted line from the daily chart sent the price lower to correct it. When it has been corrected, now market is going higher. From the hourly chart, that is the corrected, I mean that 50% is that corrected line. It can now come here at least to this bullish gap from hourly chart, or that dotted line is actually the new week opening gap high. So at least until this area market should come, then it will go higher again for this minus 2.5 standard deviation, and then finally minus 2.5 standard deviation from the daily chart. It doesn't need to reach until that area by today, but it will go toward that area by the morning session. I should have waited for the correction. That's all I just missed. I don't know what happened to me. I started to look for the buy that to set up bullshit. No man, I'm not going to forget that because if I forget that, then I will do the same mistake again. So I will explain it to myself and to you why I should not go for that buy and what I did over there. When I'll keep talking about the losing trade, then I will be able to learn the winning trade, how to take the winning trade. But if I forget them, I will do the same mistake here. I will go for the sell here. If I don't learn from there, then what I will do here, I'll go for the sell over there because now I'm feeling that it will go for that sell side liquidity. So I'll push the button over there and go for that sell side liquidity. I'll do the same mistake I did over there. I don't want to do that. Guys, don't get confused by this pushing button. There is one, two, three, four pushing button. One was break even, one was like six handle loss, and both of the other twos are actually bigger losses. I guess one was 15 handle and one was something like that. Yeah, 2100. So those two entries are bad, but rest two is break even. This entry, when I took that entry, which I got that 600 loss, it has provided me 2400 profit, I guess, if I'm not wrong. Yeah, it has provided me 2400. I just didn't close it because I wanted to hold it for so long, which I actually don't do. I I will just go for the longest run today. That's all. I don't know where it will go. It will go for that buy side liquidity or again keep going higher, or is it coming for the sell side liquidity first for that new week opening gap? Then it will go higher. I don't know that. So I don't know which way I should go right now. It seems like seek and destroy or consolidation right now to me. When it is not confirmed for me, I'm not interested to go for trade. If you want to go for the low, I mean, sorry, for the high, please go for that. You have your own decision, right? So if you would love to go for the high, please go for that. You know where will reach at the end. I can't. I don't want to go for the high. At least the way it is respecting this gap, and it has taken the high again. That means there's empty. Until I'm seeing this, I'm not interested to look for buy. More interest is here for the sell side. I'll look for that sell side instead of buying it. Awesome. Market is going higher, but without giving me any opportunity. I really hate this type of market where market provide us something, but without giving us the entry opportunity. For example, if it could take that low, reached until this area, I would be able to catch the buy move. It didn't do that. I can't look for the buy move. It is going for higher. We have marked the line here already, but It is going there without providing any entry opportunity, and I hate this market where it is really going toward your direction without you. It's really so frustrating. To be honest, frustrating. I didn't push button over here because previously I pushed the button without any logic or anything, like just pushing the button. Here I wanted to push the button with some setup. Unlike this one-sided run, okay, you see this one-sided run, like market is just going higher without any kind of correction or anything. I don't like it. And in this type of situation, I have no idea how to trade. This market is not telling me to look for sell anymore. The termination has broken that fair value gap. So it's not telling me to look for bear move anymore. I can't look for buy anymore without the correction. It has moved the way I explained, but without any entry opportunity. I hate it. I'll cover this whole PM session. I'll just take a break from 12 to 1. I mean 12:50 until that 12:50. I'll take a break. I'm not going to close the stream. It will be like this way, but I will cover the PM session as well because the morning session didn't provide me any entry opportunity. I hate this. See, this guy has broken this fair value gap. I should look for buy now, but I can't look for the buy because market didn't do the manipulation over here. It has taken those lows, but this has made the liquidity again over here. So I can't look for the buy over here, but I should look for the buy now. From there, I should look for the buy now. Here, stop loss is there. It's just 10 handle. Target is this area. But I will not go. I'm not going for that. The reason is market didn't do the manipulation. I will not go for that. I'll just stop. See it because market has broken this gap. So that was the gap. When Eminis was respecting this gap, there was a possibility for the sell side liquidity. As it didn't do that, I can't look for sell anymore. I should look for the buy. I can't take the buy because market is one-sided. Without any manipulation, market is going higher. So I'll not take that buy. Though stop loss was very small. I mean, just 10 handle. I was a little greedy over here. I didn't. I thought it has reached until the opening of that order block. but it didn't. That is the next line according to the hourly standard deviation where market should reach, as this is going to be broken. If it is going to be broken, this is the next line at least market should reach. Then reverse, it's okay. If it doesn't reverse, closed above this line from the hourly chart, my next target is this line. In between, maybe there will be another opportunity to mark the standard deviation. It doesn't need to take that line by today, but that should be the next target. I just didn't take this buy because market didn't do the manipulation. The perfect manipulation actually. As it didn't do it, I didn't take this one. This is the 50-minute candle just opened, manipulation, expansion, reset. From 50-minute chart, as you can see here, open, went little lower, which is the manipulation, expansion toward the upper side at least until this line. Then we'll see if it can break this line and keep going higher. it can make this line as a support before going higher. Minus 1.5 standard deviation from 1 minute chart, it can make it as a support before going higher, at least until this line from the 1 minute chart, the standard deviation. But it before going higher here, it can make this one as a support. From 1 minute chart, this is the minus 1.5 standard deviation, this is the minus 2.5 standard deviation, this is the 50% of that two standard deviation. From hourly chart, this was the minus 2.5 standard deviation. So both of these things can provide the reversal from there now, the correction from there now, exactly from there. If it is broken from 1 minute chart, this is the next level that market will reach, at least even before the correction, if it wants to get the correction. When market is at the all-time high, you should keep looking for the buy. From the hourly chart, there can be a weak body can close below this line, then provide me the reversal or the kind of reaction, because this is a logical level for providing the reaction, this line. In the meantime, if the body close above that line from 1 minute chart, this is the next line market will reach for, even if it wants to provide any kind of reaction. If one body can close above that line, then market is going to hit that line. If the body can close above that line, then this is gonna be heated. At least this is going to be heated. Even if it doesn't, I mean, if it go through this, then we'll see the next level if there is any other level. Body didn't close. I need the body close. Still, the body didn't close above that line. That is the standard deviation line. So don't take that line as a I mean, lightly. Don't take it lightly. That is a very strong line. If the body failed to close above that line, there is a possibility for the correction. I was not feeling good over here because the way market was moving, it was not providing me any run below that low. So I wasn't feeling confident, so I trailed my stop loss too fast so that I don't need to take a huge loss. If it doesn't want to go lower, at least to the 50% of that week, I'll get stopped out with a small stop loss. That's why I just moved the stop loss too fast. I know it's not good, but I don't like this type of candle when I'm expecting some kind of bear run from the breaker block at least. Breaker block mohawk has happened over there. Low mean threshold of that broker block has been traded over there. It should keep falling. Didn't provide me any kind of run. I wasn't feeling confident to hold this trade for so long. So I trailed my stop loss to first. This market is extremely bullish. I should look for buy only, but I'm trying to catch the trend, sorry, counter trend entry. Instead of the trend is my friend, I'm just trying to catch the counter trend entry. So every every trade is going toward the buy side. I will just outline them and I'll push the button every counter trend entry. Chris, you are with me for so long now, so you know that I don't use the 5 minute chart, brother. Any kind of reference from the 5 minute chart is not going to help me at all. If you want to hold the trade from your 5 minute chart, please hold that for as you want, hold that. But I explained that line, what is the importance of this line. So when the body didn't close above that line, I'm not interested to go for the buy. I'm only interested to go for the sell. If the body could close above that line, maybe then market could go a little higher. I don't know, but I'm not interested to hold the buy right now. If you take this line slightly or lightly, this it's gonna be your fault. Okay, just don't think like that way. I'll go for sell again from that breaker block if it can reach over here. From this breaker block low, I'll go for the sell again. Actually, I should take the sell from this order block. Let's see more precise entry if it can take me from the breaker block. But I should take the entry from this order block, which is the breaker block order block. If it doesn't provide me the what to say, I mean the entry, I'm not going to chase it. Next reaction can come from this 50% of that week. It can come from there, but I believe that eventually it is going to be broken. This is the -1 standard deviation. If I just remove this line, you will see that clearly. -1, -2. This fall can happen until this -1 standard deviation or -2 standard deviation at least. If -1 is broken, then -2 is the next level market can reach for this -2. Then it will go through this, that's a different matter. If it is broken, it will reach for this -2 standard deviation. Now you can say that brother, you trailed your stop loss, that's why you got stopped out prematurely. Shit happens sometimes. I didn't want to see this, it happened, it's okay. I go from week to week. So from week to week, -1 and -2, both of them are important. So when this -1 is broken, I believe that this market will reach for this -2 standard deviation if and only if it can go through this week 50%. As I'm bullish, so every bullish PDRA should be respected. I mean, should be broken if I want to look for sell. See this 50%? If one body can close below this 50% here, then the next target is -2 standard deviation. Why is this important? For example, I didn't get stopped out over here. Instead, I'm still in this trade. In that type of situation, I'll just cover the mean threshold of that order block. That's all. I have to cover that one because it is respecting the weak 50%. That weak 50% it is respecting. If this is broken, this is that -2 standard deviation, which is stronger. Market will fall for this -2 standard deviation. Which one is more stronger here, the standard deviation or that weak 50%? That weak 50% is much more stronger over here. Why is that? Because this is a bullish market. Why is that still over there? I should not take the entry over here right now because market has already respecting the 50% of that. Can I look for buy now? Yes, now I can look for a buy. Why? Because market has taken the liquidity. Remember, I'm not watching this time frame. So even if it is lunch hour, I'll cover everywhere. Price came back. The weak reaction sent the price until the breaker block low one more time. Can it hold the price, send it lower again? Or is it going through this breaker block now? Because if the breaker block is now going through, there is nothing that can stop my buying over here. I can simply go for the buy over there if this is going to be broken one more time, this whole breaker block, because this is the only PDRA that can stop the price, send it lower again until this -2 standard deviation, or if there is any liquidity left over here, it can send the price until that area. This is the only thing that can stop. For example, if I take the buy sell over here, where will be my stop loss? For example, I took that sell over here, my stop loss will be just one tick above that breaker block. Just one tick above that breaker block. Why is that? And where will be my target? This -2 standard deviation. Why is that? Because this breaker block should not be broken. If it is broken, if market go higher of that breaker block, perfect. That means I should look for buy again because today's trend is my friend. I will start to look for buy. So this sell is valid with this stop loss, this much stop loss until this -2 standard deviation, because -1 standard deviation has been broken. This is just a reaction from that weak 50%. So that reaction is gonna be broken and market will reach for this -2 standard deviation from that breaker block. The standard deviation came from, sorry, the standard deviation came from high, low, higher, high, the middle leg, weak to weak of that middle leg, I guess. Or was that high, low, higher. I don't remember which one. Yeah, this low and that high. Right now, market is respecting from both two standard deviation from the hourly chart, 2.5 standard deviation, and from 1 minute chart, I think it was minus 1.5 standard deviation. I guess that was that standard deviation, if I'm not wrong, or maybe the 50% of that minus 1 or 1.5 and minus 2.5 standard deviation. I don't remember what was that line, but from hourly chart, that is minus 2.5 standard deviation, very specific level. From 15-minute chart, I didn't have any opportunity to mark that minus, I mean the standard deviation level. If that breaker block is broken, that means there is nothing that can stop the price to go higher. I should look for buy only over there. So I'll push the button for the buying opportunity if body can close above that breaker block. If the body doesn't close, no buying is valid. Let me remove this. The manipulation has happened over here. Little manipulation, not a perfect manipulation, but little manipulation. Trade that weak 50%, closed above that breaker block. That means there is nothing that can stop the price right now to reach at least until this minus 1.5 standard deviation from the 1 minute chart, and then we will look for more run above that line. To remove this one, lot of lines over there. So first thing first, I want to see a body close above that line. That is the confirmation I'm coming for this black line. It has closed above this line. It can use this line as a support for reaching for that line, this line. I should not move my stop loss actually, because moving stop loss over here is risky. It can come back again for this fair value gap or that fair value gap before reaching over here. I should not move my stop loss. Instead, I should hold it to believing that it's gonna be work as a support until that black line. Around the all-time high, the standard deviation is the most powerful weapon. See the reaction from this standard deviation, that reaction from 15-minute chart. As you can see from 15-minute chart, it has traded this 15-minute bullish fair value gap. That one standard deviation sent the price for that bullish fair value gap. Now it has closed above that line. That is the sign that I'm coming for this line from one standard deviation. It can come back for this fair value gap. I told that before, and that's why I'm not able to move the stop loss. For that is fair value gap, it can come back. This time it will close above that line. I will be able to put my stop loss to the break even. The next time market will close above that line, I'll be able to move my stop loss. Why? Because the lower run has done. It's tight stop loss moving, but I prefer that one actually. So one more candle will close above that line. My stop loss will be to the break even. Look at this: low, high, lower low, week to week or body to body, new standard deviation level. So if it can go through this minus 1.5 standard deviation from 1 minute chart, how far it can reach? Another standard deviation level: low, high, lower low, the middle leg, body to body, week to week. Both of them are important. First cover body to body, then cover week to week. I mean, first expectation should be body to body. So if it can go through this minus 1.5 standard deviation, how far it can reach? Above this area until this black line. You will go every step by marking the standard deviation from 1 minute chart, one after another, one after another. This is that minus 1.5 standard deviation. If it can close above that minus 1.5 standard deviation, I guess minus 2.5 or 1.5, I don't remember, you can look for another standard deviation from there: low, high, lower low. Actually, let me show you this. You can from there to there. Minus 1.5 standard deviation, minus 2.5 standard deviation. So this is my next line where market should reach if it can break that minus 1.5 standard deviation. That means if it can break that minus 1.5, this is gonna be the next level where market will reach. Before that, it can give some kind of reaction from that minus 2 standard deviation. So right now, all I need to see, can market close one tick above that line? If it can close above that line one tick, this is the next level market should reach. So why is that important? For example, you didn't close your trade here. Instead, you had just take the partial. Where should you close the trade? You should close the trade over there. Minus 2.5 standard deviation. And it will be only valid if one candle can close that above that minus 1.5 standard deviation. Then it will be valid for thinking about minus 2.5 standard deviation. Look at the reaction for minus 1.5 standard deviation. Nobody, I mean, bodies are refusing to close above that line. If they refuse to close above that line, that means there can be another manipulation. If one candle can close above that line, this is the next target where market is reaching for minus 2.5 standard deviation. Until market make another lower low, you should keep using this lower low or that area from 1 minute chart. You can change week to week. Instead of body to body, you can change week to week. Okay, so if it can go through this, I mean, if it can close above that minus 2.5 standard deviation here, if it can close one tick above that 2.5 standard deviation, you should change it from week to week, the lowest week, highest week, until that week it has closed at the level of minus 2 standard deviation. That means it has a possibility to retrace little more. Broken that minus 1.5, this 2 standard deviation can provide you some kind of reaction. If body can close above that 2 standard deviation, minus 2.5 is the next level our market is reaching for. Why this important? Because you have to trail your stop loss until a certain level if you are still in this trade. It has to close, okay? I mean, just going above that line, it's not enough. It has to close above that line. If it close above that line, perfect. Then minus 2.5 standard deviation is obvious. That means market is at least it will reach for that minus 2.5 standard deviation. It has to reach over there. Very specific thing. It has closed above that line. So this is the next level is minus 2.5 standard deviation. Even if it wants to provide me some kind of reaction, it has to provide me that from minus 2.5 standard deviation, at least from that line. If it close above that minus 2.5 standard deviation, I will go for week to week here, week to week, to mark another level, how far it can reach before providing me the retracement or something like that. Look how it is using that minus 2 standard deviation as a support. Okay, look over there how it is using that minus 2 standard deviation as a support for reaching minus 2.5 standard deviation. Now you are hearing it, but later you will see it will work in your head without my speech, without my voice. It will keep knocking in your head. Oh, okay. So it can work like this way, it can work like that way. Okay, you will get those information without me. First of all, look over here the minus 1.5 standard deviation reaction from there. Closed above this minus 2 standard deviation. What should it do? At least it should reach for minus 2.5 standard deviation. When it will reach for that minus 2.5 standard deviation, we'll look for the same thing. Can body close above that minus 2.5 standard deviation? If it failed to close above that, it has closed below this. There is nothing wrong. Just nothing wrong because it is going from below to high. So it has been violated, but it can't be violated. When it is working as a resistance, it can't be violated. So far this is broken. So it should reach for minus 2.5 standard deviation. If and only if it is not the fake breakout. I believe it's not the fake breakout and my market will reach at least minus 2.5 standard deviation. That is obvious. I believe it's not a fake breakout. That's all. Even if it was the fake breakout, this candle has confirmed this is not the fake breakout. Okay, so it could be the fake breakout. Market could go little lower, but when this candle has closed above that line, it has confirmed that I'm not the fake breakout. That means I'm obvious. This line is obvious. I'm going to tap to that line at least. Even if I want to fall, I will tap over there. Whatever happens in this world, I don't care. Even if there is a nuclear bomb, I'm gonna touch that line. Then I will fall. I don't care about anything else. All I have to see is how the candle is going to close. Is it going to close above that line or is it going to close below that line? That's all I need to see over there. This is not something like liquidity. That means I will fall, then later maybe after sometimes I'll come here. It's not something like that. It's immediate things. Okay, something like it is broken here, immediately it has to reach until this area. Even if it wants to go little lower, immediately it has to reach over there. Then it can go lower or it can fall. It's not something you can keep it for later. It's not something like that. Minus 2 standard deviation is using as a support. Very nice support. It is using as a support. I want to see that this will work as a support and market will reach over here. That is my expectation right now to see. No manipulation. I want to see like it will take some liquidity, then it will reach over there. I don't want to see like something like that. I don't want to see that. Even if it wants to take that lows, it should reach for that line first, then it can go for that. You know, we have a human brain, so we can't remember a lot of things. That's why I don't use a lot of time frame. For example, 5 minute chart, hourly chart, 15-minute chart, 4-hour chart. I don't use them. Why is that? Because if you look here in this level, maybe it is important from weekly chart, maybe it is important from daily chart, maybe from 4-hour chart, maybe from 30-minute chart, maybe from 15-minute chart. Any of the chart will provide some kind of standard deviation around this area. Now my human brain is not able to look for or remember all the standard deviation of everything from every time frame. I don't have that power. So what I will do, I will keep using some specific chart so that it's gonna be important. I mean, overall it can reach some specific level I'm looking for. So just from one chart, why that reaction is happening from there? If you ask me like this way, start from every minute. You will find something over here. Maybe if I go to 2-minute chart, I will get something over there from the 2-minute chart. Hmm. No, not from the 2-minute chart. 4-minute chart. I don't know from which time frame it is actually important. But yes, some time frame will provide you something around over there. I don't know which time frame it is, but as I'm using the 1-minute chart, so from 1-minute chart, all I want to see market will reach over there. Why this reaction is happening from there, I'm not interested to think about that. I'm just not interested to think about that. All I care about, can market reach for that minus 2.5? Because from 1-minute chart, this is the next important level. The strongest level is minus 1.5 standard deviation. That is the strongest level. After that level, minus 2.5 standard deviation is the second important level. For taking the reversal, you need the 15-minute bearish parabolic gap. Okay, for taking the reversal, you need the 15-minute bearish parabolic gap. Without the 15-minute bearish parabolic gap, reversal entry or counter trade entry, you should not go for that. But today, as I told, I'm only interested about the counter trade entry, just the counter trade entry. Because this way, if you want to keep taking the entry, you will get a lot of opportunity, because you know trend is our friend. I'm bullish until this level. Until that line, I'm bullish. Market doesn't need to take that line by today, but I'm bullish for that line. So every kind of buying opportunity, I will go. I should go, and every selling opportunity, I should let go. See here, that is that minus 2.5 standard deviation. Now, can market go little lower? 100% it can go little lower now for some kind of this type of manipulation. See, this manipulation happened from that line. Same kind of manipulation can happen now from that level. As a hindsight, I know this is a very nice hindsight, but yeah, now it can fall little more, maybe until the 50% of that specific week. It can reach until that week 50%, but it is acceptable. If body close above that line, then I should go for week to week to to readjust this standard deviation. In that type of situation, the important level will be minus 1, minus 2. Both of them will be informative or important to me. If you want to take entry over here in this bullish market, you have to wait for this type of manipulation. When the manipulation will happen, if you see there is no period that can stop the price, you should look for buy. Every manipulation you should let go, because we are not like counter trader in, I mean trade counter trend entry guys. We love to go with the market maker. Now market maker is sending the price higher, we should look for buy only. Every lower run we should let it go, but I want to catch every lower run today. I want to go for that lower run, not the higher run. But if your bias is bullish, you should look for buy only. I am only interested for the sell today. I will go for every counter trade entry. 21862 is what I'm expecting. 21862, 21862, 862. This one. Okay. Okay, mama. I kept it over there. Do you get this standard deviation, guys? This reaction from this standard deviation? No, I didn't mark it after effect. I marked it before it happens. Then this standard deviation, that minus 1.5 standard deviation, which is working as a support, a very nice support. Learn it and earn it. Let me check the daily chart one more time. Minus 1.5 standard deviation is working as a very nice support. Okay, a very nice support. This is that 0.5%, I mean, sorry, 50%. Remember, I talked about that reaction or reversal. I wanted to reach until that propulsion block at least, but from 15-minute chart or hourly chart, the express I expected it to reach at least until that area. Now it is reaching for that minus 2.5 standard deviation, which is my next line where market is reaching for. Before tapping to this black line, it can't fall. It can't give me some kind of reaction or maybe come back again. No, I'm not expecting like that way. I don't know it will reach over here by today or not, but my target is that line for today. Or I mean, not for today actually, for the bull run. Let's go to the hourly chart. That was the hourly gap. I told that CPI run, how to predict that CPI run. In that specific day, in Monday, I told that it can't reach for that sell side liquidity. If it reach for that sell side liquidity by Monday, what it will do in Tuesday? Remember, I told that. If you don't remember, you guys are telling me that this low is going to be taken. I told that no, it should not go for that. It should stay around this area. At least it should go higher, but it should not go for that low. If it do that by Monday, what it will do in Tuesday? From hourly chart, that was the hourly fair value gap, which was important to me. I told that this all are in, I mean, random reversal. As it was high time frame or the all-time high, obviously you can expect this type of randomness for a little time, but not for a long time. That was the liquidity level as well. And I told that before reaching to this hourly gap, I'm not interested to think about the buy. When it reach over here, CPI run, I will expect the buy. Yesterday, I clearly told that. In 15-minute chart, that was the sell side liquidity over here, that relatively equal loss. Market has taken that relatively equal loss. Clearly, I told yesterday the scenario. Exactly, I told that if it can take that liquidity and this gap hold the price, I will look for the CPI for all-time high and for that line. That line will be my target for CPI. If it doesn't take that sell side liquidity by yesterday, then CPI first run will go toward that sell side liquidity and that hourly gap. Then it will go higher. If Tuesday market close above this new opening gap, I will only look for that minus 2.5 standard deviation. So what happened yesterday? Market closed below this sell side liquidity, trade that area. I took the buy over there, and the whole thing I didn't do anything. I just wanted to take that counter trade entry. Trade that hourly gap, closed 50% above the 50%. This whole consolidation, I wanted to see the CPI move will first, the week, like boom boom, something like that. So that first boom will go toward that propulsion block, then next boom will go toward the all-time high. It didn't do that. Instead, it has just opened, started to go higher. Clearly it is going higher. That was our expectation, that CPI move will go higher for that minus 2.5 standard deviation. From hourly chart, let me go to hourly chart one more time. When Jack T asked me how far this run can go before the some kind of reaction, I have marked this one. That was minus 2 standard deviation. Over here, that dotted line, I told that if the body doesn't close above that dotted line, it can provide me some kind of reaction from there. As you can see, it reached until this dotted line, then closed there. That reaction from 1 minute chart, not a huge manipulation, but 1 minute chart, that was enough manipulation. Went through this dotted line. What is the next level? That is the line. So from hourly chart, hourly candle, if it failed to close above that line, again it can provide some kind of reaction until the bullish fair value gap. So if this candle from the hourly chart doesn't close above that line, the last candle, okay, so 159 candle, if it doesn't close above that line, then market can fall for that bullish fair value gap. Now that means for today the bull move is done. It's done for today if this candle failed to close above that line. If it close above that line, I'm expecting market will go for that one, but I'm not like 100% sure it is going for that by today. I really don't want to say it will give me that much run by today, because if it provide me this, tomorrow we have PPI. What I will do tomorrow? I don't have any sell side liquidity. So what I will do tomorrow? I will have nothing to do if it reach until the certain level we are expecting, which is called the standard deviation. Oh, you asked about Jack E-mini S&P, but I thought you asked about the Nasdaq, because in E-mini S&P I'm not interested about the precision. In Nasdaq I'm interested about the precision. So Jack, you got your point why I actually marked the leg, this leg, not that leg, right? I believe that this confusion has gone, and as I showed you today, I believe that you will get more confidence by using the way I'm marking it. Now I know that it's not like ICT himself, but I got more precision this way. Like that dotted line came like the same leg I have marked. That dotted line, it from the daily chart, it came like the same way I have marked this line and that dotted line, both of that line. Okay. So this is the first thing I want to see by this hourly candle. Can it close above that line? If it failed to close above that line, I'll look for the reaction until this fair value gap from the hourly chart. If it close above this line, then I will start to think about the buy, but I really don't want to see it will reach until this line, because if it is happened by today, what I will do tomorrow? Tomorrow I have the PPI, so what I will do tomorrow? I will have nothing to do. This from the week chart, and then let me go to the 15-minute chart. From 15-minute chart, I am not able to mark the manipulation leg, or sorry, the what is I mean the standard deviation, because no standard deviation is going to cover that high. So I'm not able to mark the standard deviation from 15-minute chart, from 1 minute chart. Before this leg, before that leg, I had only manipulative leg is here. So low, high, lower, low. If you go from body to body, if you go from body to body, you will see that minus 2.5 is going to be violator, or it's too far from there. But either way, this is that minus body to body until this thing happened. So until this line or this high, this standard deviation is important. That standard deviation is important until that high, because after that high, market made another manipulation leg here. So this is not important anymore. I have to reach over there for marking my standard deviation. Now if you look for this standard deviation until that high, okay, do you understand why this high is important? Not after that, this high is not important, because this high is going to cover that manipulation leg. After that high has created, this manipulation leg has created over there. Where did it go exactly to that standard deviation? Until -2 standard deviation, which is actually -1.5 and -2.5, 50%. That same dotted line from the daily chart. Remember that dotted line? This is that -2 standard deviation reached until that dotted line. So think this as a dotted line. That means the 50% of that two area. So this area has the power to give some kind of retracement, which has I got that retracement from that area. When I got that retracement from -2.5 standard deviation and got another leg over here, see this leg, another leg over there, which is a manipulative leg. So the next move I'm going to cover by that specific leg, lowest body to highest body. This is -2.5 standard deviation. See this line? It tapped to that -2.5 standard deviation exactly tick by tick, then provided some kind of reaction or reversal. I don't know what it is going to happen, but if it can go through this line or that line, then I will look for another low, high, lower low, another middle leg to mark another -1.5 standard deviation, and I will keep doing that until this line, because that is the -2.5 standard deviation from the daily chart, which is my daily target. I'll look for that again. But look at the reaction from -2.5 standard deviation, which is the most powerful line, -1.5. In between, this is the 50%. It can have the power to send the price lower for that manipulation. This can be the reversal. Okay, this can be the reversal, but this is gonna be the reaction. The 50% of that -1.5 and -2.5, which is -2. It should be the reaction or the retracement, but this can be the reversal. -1.5 or -2.5, they can provide you the reversal, not the reaction, reversal. But -2 standard deviation, this can provide you some kind of reaction. Okay, always remember that. So go everywhere, every time. As I told, I'm a human being. I can't remember all of these things. That's why I'm not able to mark them. Now look at this fall. How far this fall can go? High, low, higher, high. This is the high. This is the standard deviation level. Okay, so I would love to mark from body to body, from there to there. -2.5 standard deviation. See this -2.5 standard deviation over here. -1.5, -2.5. Both of this level are important. They are the strongest level for me. -1.5, -2.5. In the meantime, I will give the priority of that weak 50%. That means as I'm bullish, this market is bullish. If I would love to look for any kind of sell, I wanna say that I wanna see that this 50% is gonna be broken. Of that specific weak 50% is going to be broken. If it's not broken and there is no bearish PDRA, that means any kind of breaker block, fair value gap, inversion gap, whatever you will have over there, if that is broken, like the way I marked that breaker block, remember? When that is going to be broken, you should look for buy again. Until where? The new leg which has made the low, high, lower low. That highest candle for 1.5 standard deviation. I'm going to remove this weak 50% just to show you, and this line also from my chart, just to show you the perfection of that -2.5 standard deviation. Can you see it? Is it clear to see? Now weak reach until this -3 standard deviation. Okay, it can go little lower of that -3 standard deviation. All I care about the body. Is the body respecting that -2 standard, 2.5 standard? Very specific. Okay, not -1, 0.5 to 3.5, nothing. -1.5, -2.5. Any of them can stop the price for the reversal, not the reaction. Same thing here. Remember that line is the -2 standard deviation. This line exactly -2 standard deviation. That can be the reversal. until that week 50%. Do you remember about this week 50%? That week 50%? This week 50%? Is something similar to you? Do you think there is something that's similar to you? What else do you need about the standard deviation? I believe that I have already provided you more than you expected. Now, this is a bullish market, so I will give the priority of that 50%. If that 50% is broken, then I will believe that minus 2.5 standard deviation is providing me the reversal over here. This is just a confirmation, not entry opportunity. For taking the entry, you need a 15-minute bearish fair value gap. For taking the entry, you need a 15-minute bearish fair value gap. You wanna catch the reaction, that is different matter. Like 5 handle, 10 handle, that is different matter. But if you want to catch the more run, then you have to wait for a 15-minute bearish fair value gap. This is the way you can use the both standard deviation level at the all-time high. Remember, this is only valid at the all-time high. Out of the all-time high, if you go for this, you will hurt yourself a lot. So please don't go for that. See you, Outlander. See you, brother. I wanna cover the whole PM session as well. But before that, I will take a break for yeah, 25 minutes break. I'll be back around 1 p.m. Keep observing them, and whoever take the leave, you can leave. Okay, I wanna be back. I on. I will be back at 13:00 p.m. New York local time. I have to pray actually. Okay, so I can't leave the praying. So I'll be back around that area. Wow, I got 151 likes. Thank you guys so much. Thank you so much for providing at least 151 likes. I love you, man. Love you all. Why W is double double. Okay, guys. So in the meantime, if you wanna leave, you can leave. Otherwise, if you wanna stay, you can stay. But I'll be back around 1:30. Okay, still there is someone. I thought everyone has left already. Okay, guys, thanks for being over here. I had to pray, okay? I had no way without praying. Okay. Staying starting to ending. Hey, Arif, thanks for that, man. The price action was so awesome today, but unfortunately, it didn't provide me any entry. The way I was expecting market to work today, it worked exactly the same way. My unfortunate market didn't provide me the entry. I'm watching that inverse gap below the breaker block. I'm just watching this inverse gap, this one. My belief that it the 50% of that gap will hold the price. That means the mohawk can reach until the 50% of that gap. That is my expectation. That's why my stop loss is just below that gap, exactly to the below, because I'm expecting it will reverse from the 50%. If it doesn't reverse from the 50%, I'll get stopped out. So here, from there to there, so like 70 11 handle, something like that. Remember that 50%, I mean, sorry, that line from the hourly chart. I told that if it doesn't close above that line from the hourly chart, it has a possibility to fall from there. So check it where the body closed from that hourly week. Sorry, from the hourly candle. Wanna look for buy until this guy doesn't take that line. This is the all-time high. So wanna see even S&P will go for that all-time high. Until that area, I'll keep looking for buying opportunity for the Nasdaq. This is -1 standard deviation because I went week to week. As I went week to week, -1 standard deviation, -2 standard deviation, both of them are important. When it will be at this -1 standard deviation, I'll trail by stop loss. No, SK, no, it's not okay. Today, lunch hour trading is acceptable only. I don't know, I don't remember actually. Did I talk about this or not? Lunch hour execution is only acceptable if you have a holiday tomorrow. For example, tomorrow is holiday. I can trade the lunch hour today because it's gonna be the best beautiful price action in the lunch hour today. If I have the holiday tomorrow, not the Saturday, Sunday, I mean the normal holiday. Okay. After holiday, lunch hour is the area where market started to get ready for the algorithm around the lunch hour. You don't need to trade around lunch hour, but you will expect that from the lunch hour, market will start to get ready for the algorithmic price action after holiday. Okay, I talked about that. Okay, I don't remember. These days I'm forgetting a lot of things. Breaker block, order block. Breaker block, propulsion block. After price reach to that -1 standard deviation, I'll put my stop loss below the propulsion block. According to the breaker block entry, market should not go below the mean threshold of that breaker block. It should not go below the mean threshold of that breaker block. According to the breaker block rules. As it went below this breaker block low, it's not good. It's the bad sign ever. My last line is the mean threshold of that order block. That means market should not break the mean threshold of that order block. This is the 50%. It should not close below this 50%. I'll put my stop loss now below the order block. Exactly just below, one tick below that order block. Because the mean threshold of that order block should not be broken. If market really would love to go higher, this line should not be broken. And I'll keep the line over here instead of that standard deviation. Line 1, line 2, line 3. Is broken, so I don't need that one anymore. The body will close above that order block. I'll put my stop loss below the mean threshold. Just a body will close above that line. That low has taken no way to hold this trade until the low or any other area. Maybe it will fall because this whole setup has been collapsed here. Market will go higher. I have no way to hold the trade until, stop loss until this area. I'm not interested to do that. I'll be put the stop loss just below that order block because it should hold the price. This run stopped me out and then went higher until the level it wants to go. I don't care about that anymore. My trailing stop loss is past. No need to follow that on. Please don't follow that on. I'll keep saying this on. Would love to see is this fake breakout, and then it would love to go over here on. But that doesn't mean I'll put my stop loss over there. My stop loss will be just below that order block, one tick below that one. If it stop me over there, I'll get stopped out over there because I don't see any logic here that low will be breached here. This low should not be breached. So my stop loss should be safe over there. I know it's not a big difference, but still, this is precision. I love to work with that precision. that specific candle stopped me out before closing out this order block. So that candle I am not interested to see over here in this market. Now you can say that, brother, whatever you want to see, market doesn't care about that. But I care. If market doesn't give me the precision, I don't want to hold that trade because this market can collapse. Tap to this order block. See, I want to see exactly that thing. But before this candle, even if this candle appeared, no worries, but should not breach that low. That low should not be breached because that is the order block. Closed above this order block, tap to this order block, keep going higher. This is the exact thing I want to see before getting stopped out here. It should provide me the speed now above that line. At least one tick above that line. Should give me the speed over here with an unfilled fair value gap. This precision was good, but that wasn't good. It was bad, the worst ever. So when it breached that low, I'm afraid to hold that trade because that low has been breached over here. It should not be breached over there. I'm waiting for this S&P to take that red line. So until it will go for that red line, this guy will keep going higher. How long? I don't know. Maybe I will have another opportunity to look for area. I'll go for that later. First, let him reach until that line, until this line. First thing I want to see a body close above that line. That is the first thing I want to see. As per ICT, I should take a buy here exactly to that candle close. I should take a buy, but I'm not going for that. But I would love to outline that here. Stop loss is going to be below the mean threshold of that breaker block, just below that mean threshold, little below. That means we can read the damage little below and until that area. Just not interested to go for this one. Will not push the bottom. That retracement, I can't wait for that. If I want to take re-entry from the breaker block, I can't wait for that. Whenever the candle ICT took the entry when market started to go higher, one tick go above that high, he pushed the bottom. I wait for the body close above the breaker block, then I love to take the entry. Please don't copy the trade or anything, just keep watching the market. Because wherever I'm putting the stop loss, I don't need to put it over there. I'm just putting it in a precise level where market should not go. For example, here it's just 6 handle. I don't need to put it over there. I can simply put it over here. Still, that is gonna be 11 handle. But I'm putting it over there where market should not reach until a certain level. Obviously, for example, this line, at least until reaching for that line, market should not come back again. If it can break that line, then this is the next line. If it can break that line, then this is the last line where market should reach. In my life, I never see that market ever leave this type of clean highs. That means tick by tick, clean highs or tick by tick clean lows. I never saw in my life that market left them open. তবু এই দেয়ালের শরীরে যত রঙ যাওয়া মানুষের সকাল প্রতিহিংসা তোমার চেতনা যত উদ্ভাসিত আলোড়ন আকাশে মতন কোষণ নীলে ডুবে থাকা তোমার প্রিয় করুণ আর চোখের কাছাকাছি সে যেন পদ ভেঙে মানচিত্র রেখে তবে এর মাঝে মিশে না the most strongest level is this one and then that one. These two are the most strongest level. That means they can provide the reversal. But this line, that middle line, it has the power to give the retracement or reaction, not the reversal. They have that power, this one and that one, to give the reversal for longer term sell side liquidity. But this line has the power to give the retracement. That means there is some kind of unfinished business here, some unfilled fair value gap that should be filled. This line has that power to send the price until that fair value gap. But any of this line has the power to send the price lower to take the liquidity. Now need to see how the body is going to close above that line. Can it close above that line, or is it going to close below that line? If it close below that line, I will trail my stop loss, not to the break even. I'll cover the breaker block high. It has closed above that one. Either way, I'm going to be safe over here, which is going to cover that breaker block top, only the top, because market reach until a certain level here. As it closed above this one, I want to see this will work as a support, and it will reach at least until this line by using this as a support, because minus one standard deviation is the strongest deviation, which is going to use as a resistance or as a support. As I'm going from week to week, so minus 1 and minus 2 is important. If I go body to body, then minus 1.5, minus 2.5 is important. See the reaction from that order block. So my stop loss is safe below the mid threshold, because this is how I want to see the order block will hold the price and send it higher. This is how I want to see it. That small thing just stop me out here. This is the price action I don't want to see at all. I don't like it. Let's see, is this the fake breakout? One candle close above that line, the very next candle come back again, closed below this line, which is called the fake breakout. If I go to the 2 minute, I believe that in 2 minute, okay, not 2 minute, in 3 minute, you can see this is still a week. So that's why fake breakout is something I don't like to see. I need another candle confirmation that it's not the fake breakout. Instead, I am actually broken. I'm reaching for that line at least. এইখানে অনাবিল জানালা মুগ্ধ ঘরে আসে যায় ঘরে ওঠা মধ্যরাত্রি জমে আসে পরে আমাকে ছিঁড়ে দেয় অবাক শহর ভেতরে কি Another body close above that line, so you know where the market should reach before even falling, even if it would love to give me any kind of reaction, where it has to reach before that reaction. So that is the line where I should take the partial. That means if I am in this trade, either I should take the partial to that specific middle line, or I have to put the stop loss to the break even. Any of them I have to do when it will touch that middle line, that middle black line. I'm showing you the standard deviation using by today. I hope that it will help you to understand how to use the standard deviation at the all-time high. And you will just observe, am I looking for any random thing, or I'm just going to use some specific thing. It tapped to this line. If it close above that line, that is the best case of scenario. If it doesn't close above that line, that means it has the power to send the price lower. I don't want to take the risk. So if I take the partial over, okay, it has closed above that line. It should reach for that line, at least until that line. My stop loss will be at the break even now. There is no power that can stop the market to touch that line. There is no power at all. It should reach for that line. But that doesn't mean that it is going to happen. Okay, maybe this is gonna be the hindsight. I don't want to see price come to this parallel gap. See this parallel gap? I don't want to see it will come to this parallel gap before tapping over there. The best case of scenario, the market will reverse from the 50% of that parallel gap, so that I can use this gap as a breakaway gap. This gap. I want to see it you will use as a breakaway gap. And market will reverse from the constant crossment, at least from there until this line. I don't like it. The way it tapped to this high, I also don't like it. I know you will say that it doesn't matter you like it or not, but I love to see something very specific, precise. Obviously, it can come over here to cover that volume balance. It is okay. See, this candle has been reversed not even from the 50% to the top of this parabolic gap. This is broken. This line should be traded. Now market will give me some kind of reaction or reversal. It is possible, but that high should be taken. In this whole price action, I just didn't like this candle went below that candle one tick. I just didn't like that part. Just because of that, I got stopped out over here. You can see here. Just to the bottom, exactly to that bottom, I got stopped out there. This is the next opportunity to take re-entry over there from that breaker block until that line, at least until that line. The way I trailed the stop loss, this is how I would love to trail the stop loss. I know guys, you are using the slang language. Let me open the comment box. AFX, Manu Films. If anyone asks me, I can tell them he knows what he talk about. Yep, I think I know a little bit about that. Master of precision. I love the precision, brother. I'm trying to be precise like ICT himself. Hey, FX, thanks for that penguin, man. I love you. Trade Terminator. No, man, I got started here. This market just stopped me out there. Otherwise, that was very nice trade. SK, boom. Thanks for that, SK. Thanks for that penguin as well. Hey Abdul Muti, thank you so much, man, for that penguin. And last but not least, John, thanks for that boom. AFX, thanks for that love, man. For example, I'm still in this trade. Still in this trade. What I want to see, I want to see body close above that line. If this line is broken, then market can go little higher. If it doesn't broke, then market can reverse from that line. Standard deviation I'm showing you by today's live. Please focus how to use this standard deviation. Remember that call exactly to that minus 2.5 standard deviation. Exact point. That that reversal, everything I'm using from the standard deviation. Traders Club is ICT your father? No, ICT is not my father. He is my mentor, but he is not my father. My father died in 2022. Meta Insta is the outage from more than 30 minutes. Okay. Traders Club, ICT studios. No, don't say like that, way, brother. And I'm not her, I'm his. Okay, I'm a boy. My voice looks like, I mean, sounds like a girl. Oh man. Do you consider 131 candle? 131 candle, this one? Yeah, it tapped to this breakaway gap, brother. It tapped to this breakaway gap, to the top of this breakaway gap. I don't like this. I wanna see it will be fully untouched. That is the precision. It has been reversed from that 50%. It's cool. See, nobody closed below this 50%. It's cool. But like the way this candle failed to trade that fair value gap, I wanted to see this candle will fail to trade that candle as well. But fortunately or unfortunately, there is a volume balance. I really don't know how to use this volume balance, but there is a volume balance over here. This candle closed, this candle open. See this volume balance? Market has traded that small volume balance and then went higher. Closed above this line. I wanna see it will go little higher. How far? I have to look for another opportunity to mark that one. Okay, let me check if I can mark another standard deviation level. Mm, to be honest, can try this one. So minus 2 standard deviation is over here. Let's see if it can reach until this minus 2 standard deviation. When that that thing, I guess I marked from there, if I'm not wrong. I don't remember what did I mark that on, but I marked it in live. I have marked week to week. So my intention is that line. Minus 2 standard deviation is important to me as I marked week to week. So it should reach until this area when it has broken this minus 1 standard deviation. When it has broken this one, it should reach until that line. But body to body is much more precise for here, for example, there. Which one I marked, I don't remember. So body to body is much more important than week to week. But if it went outside of the body to body range, then I can use the week to week body, I mean candle, week to week, if I have no other opportunity to mark the standard deviation. Then I will give the priority to this minus 2 standard deviation, minus 1 standard deviation until this area. If it is broken, then it should be traded. If that is broken, then I have to look for another opportunity to mark the standard deviation. My English is bad. Bad than, I mean, your English is more bad than me? I don't think so. How do you choose which swing to measure? I have already made two live. I have dedicated two live for that standard deviation. So, like 2 days, one after another, I talked about this standard deviation. Or what can I do? I can actually mark it from the another time frame. So let me go to the 2 minute chart because that is the most obvious chart out of the minus 1 minute chart. So in this chart, can I find anything? Yep, from 2 minute chart, all I can see is the next level is this here. So I'll put this line over there. So this is the minus 2 standard deviation from 1 minute chart. This is the minus 2 standard deviation from 2 minute chart. So let's see if it can reach for that minus 2 standard deviation or not. Eventually, my target is this black line. You know that, right? And for emination P, I wanna see this is going to be taken in the meantime. Emination P will go for that red line. Until emination P doesn't take that red line, I'll try to look for buy from Nasdaq. This is the unfinished business so far. Before going to those lines, can it come again here or finish the unfinished business? Then can go higher again. That is my intention to see right now. So far, it has provided us the exact run we are expecting. Remember from 1 minute chart, the exact minus 2 standard deviation. So here I'm forcing the market to give me another line or another level. I'm forcing the market because market didn't provide me that yet. So I'll go for that. If it provide me another opportunity, then I'll start to mark the standard deviation. Otherwise, this is how I can keep forcing the market to provide me some kind of entries or lines to go higher. So let's see this 1 minute breakaway gap or the unfinished business can hold the price and send it higher now or not. Or can it fall for this sell side liquidity? See this sell side liquidity over here. I'm interested to see can it fall for this sell side liquidity now, which is also a clean loss. I don't want to see this type of clean lows will stay in the chart. So here, if I would love to take a sell, remember, if I would love to take a sell, I have to wait for a 15-minute bearish fair value gap. Anything I want to do for the selling, I always need a 15-minute bearish fair value gap. Without the 15-minute bearish fair value gap, I should not look for sell. I'll go for this one. Tap to this gap, I'll take the sell. Can anyone tell me why I want to take a sell from this gap? I should cover this candle only, but as there is a fair value gap as well, I would love to cover that fair value gap. Both of those fair value gap will be covered. Target will be this clean lows. Market should not leave this type of clean lows. I don't like to see that market will leave those type of clean lows. So I want to target that clean lows as my target. But again, I should just cover that candle. So I am taking little more risk over here. To be honest, it's not a huge risk, just 900. Just 900 stop loss, okay? And 20 handle target profit. Inversion fair value gap. That is my inversion fair value gap over there. The good thing is market has broken that last fair value gap. That is the best thing here. See, this candle has closed below this fair value gap, which is the last fair value gap. That is the best case of scenario for me when I'm in this sell. As I told, I will go for every counter trend entry. If you look for sell, for example, you don't want to take the losing trade, then you have to wait for a 50-minute bearish fair value gap before taking any kind of sell. Any kind of sell. After a big bull run, you have to wait for a 15-minute bearish fair value gap to take a sell. That is the rules. Without 15-minute bearish fair value gap, no sell should be taken. Please don't take it. This is a good thing that market has closed below this fair value gap. If and only if that is not the fake breakout, then this fair value gap should hold the price, send it lower, and closed below this fair value gap one more time. That fair value gap should not be violated, or that candle high should not be violated. The body will close below this candle. I'll put my stop loss above that high, that candle high. It will close one tick below that candle. I'll put my stop loss over there because this is gonna be my order block. The same logic over there. I'll put one tick above that candle as it's gonna be my order block. If the body can close below this candle. If it doesn't close, then I have no opportunity to trail the stop loss. Either it will hit my trailing stop loss or it will go toward my direction. So I will have no opportunity to trailing it, my stop loss. Got a sprout. The problem to take sell without the 15-minute bearish parabolic, this is the problem because there is no parents over here that can stop the price, or I can get so confident that it's gonna hold the price. I don't have anything. If this candle can close above this small fair value gap, it should keep going higher. Same thing over here. Did a little manipulation over here. This relatively equal loss has been taken. It will keep going higher again if it can close above that highest fair value gap. If you would love to go for sell, you have to wait for a 15-minute bearish fair value gap. Otherwise, if you go for the sell, you will get hurt a lot of time in a bullish market. I will go every selling opportunity only. No buying opportunity, only selling opportunity I'll go. And I'll push the button for selling only. But buying, I'm already showing you when and how you can go for the buy. Because buying PDR is gonna help you much more better than the selling PDR. Selling PDR will be activate if there is a fair value gap, bearish fair value gap from 15-minute chart. See this small fair value gap over here. If it can close above that fair value gap, I don't need those lines anymore, those things anymore. I have already got low, high, lower low. So this middle leg, I have already got my new standard deviation level. So from there to until this line, this minus 1.5, I'm gonna put it over there because over there I was forcing the market, but now I have the way to mark the standard deviation. All I need to see, can this travel gap is going to be broken. It's broken, I'll look for the buying opportunity. Any kind of fair value gap, any kind of order block, anything, breaker block, anything over there. I'll look for the buying opportunity. Until then, minus 1.5 standard deviation. When this is going to be broken. The same way I took that buy, remember that buy the word from that breaker block buy. So all of these things, when the higher PDR is going to be broken, this one, I'll look for the buy. If it is not broken, I'm not interested to look for the buy. Selling is only valid if there is a 15-minute bearish fair value gap. No 15-minute bearish fair value gap, no sell is valid. I will go for every selling opportunity only. No buying opportunity. I'm just talking about the buying opportunity, how I can go for the buy. But if you want to take the buy, you have to look for these things to frame your buying setup. I'll go only for the selling opportunity or the sell. This standard deviation is valid until this law is not taken. If this law is taken, then this standard deviation is not valid anymore. I have to mark this leg for the standard deviation. Taking entry, how to take the entry, I have already explained a lot of times. So please don't focus on the entry by this session. Instead, just focus how I'm just observing this market, going for the sell. Now, selling is not for your to take that on, to identify the selling opportunity over there, how it is going to work over there. Just because of that, you will observe the selling opportunity. But real sell, if you want to take, you have to wait for a 15-minute bearish fair value gap. After that big bull move, I'm not interested to take a sell without a 15-minute bearish fair value gap. Not only the 15-minute bearish fair value gap, you know how to use that on. Every buying opportunity, I will use this thing, that one. I'll just use that one. For me, buy is valid if and only if market can close above that fair value gap. Then I will go for the buy until the standard deviation. Where was that? I guess that line. I don't remember. In a bull market, if you want to take a sell, you have to wait for the bearish fair value gap. This low has been taken. If market go higher again, close above this parallel gap, this leg will be validate for marking the standard deviation, how far it can reach. This bullshit market stopped me out again for one handle. I mean, sorry, for one tick, I guess. Yep, this is bullshit. I hate this market. I'm just focusing on these lows because they're clean. Market doesn't like that type of clean lows. So I'm focusing over here for that clean lows. I didn't understand your commentary. What did you say exactly, brother? Now, if this time market stop me out for one or two tick, then I will just cry. I have nothing to do except crying. See this down close body close candle from 15-minute chart over here. This leg has traded this gap from 15-minute chart. It has traded this gap. This is a perfect order block. It came until this opening of this order block. Can it reverse from there? 100% it can reverse from there. I don't want to take that risk from until this area. So I trailed my stop loss, covered just that entry gap and one tick of that breakaway gap. Just one tick of that breakaway gap because it can be reversal now. I know that this is a bullish market. I should look for buy only. No sell. I'm going to repeat one more time. No sell is valid until there is a 15-minute bearish fair gap. No sell is valid. I'm just going for the selling opportunity and I will just mark buying opportunity with this tool, with that tool. But selling, I will go for every selling opportunity with until the logic, and the way I will trail my stop loss, you'll just observe that trailing stop loss, nothing else. As this is an order block from the bullish market, this is a bullish order block. It reached until this bullish order block. Can it reverse now? 100% can reverse. So what is the logic to put the stop loss over here or over there? Because this market can go higher, stop me out over there. So I would love to see this will hold the price, send it lower. If it doesn't do, I'll get a stopped out over here. A very small loss. But I don't want to hold this trade. Instead, I would prefer to go for the buy. Either way, I should look for only the buy. But this is the way I should prefer only the buying opportunity. If this market keep going higher until 240, I will keep looking for the buy run. Around 240, then I will start to look for the selling opportunity because buying will be done after or around 240. Arif, bro, are angry with me? Why I will get angry on you, brother? Market has made a new leg, so I should look for this leg as my standard deviation from this body to until that body. This is minus 1.5 standard deviation. So when market will close above this fair value gap, I'll start to look for buy until this minus 1.5 standard deviation at least. Until it's not broken, I'm not interested to look for buying opportunity, any kind of buying opportunity. Even if I go for the buy here, I have to take a partial over there or I have to put the stop loss when market will reach to this gap. No sell is valid without a 15-minute bearish fair value gap. As some of you actually join me later, so you guys can think that why this guy is taking the sell in a bullish market. I'm just looking for the selling opportunity, not the buying opportunity to trail the stop loss. If I'm in a wrong side, I don't want to take a huge loss, so I will keep moving my stop loss. That's all. You will keep looking for buying opportunity only. Just buy, just buy, just buy. Every single time market will take the liquidity, then it will provide you any buying opportunity, you'll go for that buy. No sell until a bearish fair value gap. All it has to do is it has to take the liquidity. Whenever it will take the liquidity, you will look for the buy. It take the liquidity, you will look for the buy. It has taken the liquidity, you will start to look for the buy. If any of you would love to take a sell, I keep repeating this thing. If you would love to take a sell, you have to wait for a 15-minute bearish fair value gap. This is not the first time I'm talking about this. It's been a decade. Okay, I'm talking about this 15-minute bearish fair value gap. If there is no 15-minute bearish fair value gap, no sell is valid. You should keep looking for buy only. Just buy, just buy, just buy until a certain level. Until this line, you will start keep looking for buy. No sell is valid. When you will get that perfectly, then yeah, sorry. Before getting that, if you find any bearish fair value gap, and then you know that how to use that 50% of that bearish fair value gap. If you can use that bearish fair value gap 50% for the sell, it's valid only after that. Otherwise, no sell is valid. I will go for sell only today and buying every buying opportunity. I'll outline them. So far, the way we took the buy only, it was working the best way. Though not, it's not perfect actually. Oh, sometimes shit happens. I didn't like it. Just made another breaker block. So low, high, lower, low. So another like I will actually mark them when market will start to go higher. This market will keep falling, let him fall. Don't take any sell because after a big bull, always look for a bearish fair value gap from 15-minute chart. It is stopped me out here. It is stopped me out there before falling this sell. I hate this market. That is the clean low. Market doesn't leave that clean lows. Buying are valid if and only if market can close above that fair value gap. In the meantime, after clearing that sell side liquidity, if it provide me any buying opportunity by using this higher time frame period, which is the order block, maybe until the mean threshold of that order block, then I'll go for the buy again. This will be the partial, and then finally I'll look for the standard deviation level. Selling is valid if and only if there is a bearish fair value gap from 15-minute chart. No bearish fair value gap, no sell is valid. How to take the buy, you already know that, right? Market will take the liquidity, market structure sheet, fair value gap, boom. But in this market, selling or predicting selling just for taking one trade, I will take 1,000 losing trade. I don't want to do that. So I will always wait for a 15-minute bearish fair value gap. If I get that, sell is valid. No bearish fair value gap, no sell is valid. For catching that run, I will take a lot of losing trade. I don't want to take those losing trade. So selling is valid if and only if there is a bearish fair value gap from 50 minutes chart. Not only the bearish fair value gap, you know that how to use that bearish fair value gap constant crossment. Never ever follow my trailing stop loss. Never ever follow my trailing stop loss. I love to work with the precision. So I get a lot of stopped out, but never ever follow that. You will follow the way you have learned the trailing stop loss. Please follow that. I keep saying this thing, okay? Relatively equal lows. This low has made the strongest liquidity now. So previously I had just relatively equal lows. Now I have the strongest liquidity that should be taken. For taking the buy, you don't need any 15-minute bullish fair value. For taking buy, you don't need anything. All you need just a higher time frame PDRA. So this is the order block. Any of this level can stop the price, sending it higher again. So taking the buy, you don't need the 15-minute bullish fair value. But for taking a sell, you need a 15-minute bearish fair value gap. I keep repeating this because some of you can be new over here. So you can think that this fall we miss. We are not going to miss this sell or this fall. We are not going to participate in that fall. We need a 15-minute bearish fair value gap. This is a bullish market. Trend is my friend. Today, trend is my friend. So I'll go for my friend only with my friend. See this sell side liquidity market left over there around this area. Is market going to do the same thing over here? History is gonna repeat over here. If this market can take that high until 240 or around 240, you will see market is bullish. Around 240, you will see market has started to reverse. Keep that in your mind, okay? Until 240, exactly not 240, around 240. So like 233, 34, 35, or maybe 241, 42, around that level, it will start to reverse. At least it will provide you a perfect selling opportunity without 15-minute bearish fair gap. If it is extremely bullish until 240 or around 230, until around 230, this is something kind first time then price. Never ever follow my trailing stop loss. It's my request. If you want to learn the best money management or trailing stop loss management or anything, just go to our Discord, check the main menu pin post. Over there, AFX has provided an idea about the money management. In my life, I have never seen better than that money management. It's my personal opinion. You guys can check that out and then you can take the decision. It's the way you should be profitable. If you follow that way or that money management, you will be profitable. Nobody can stop you. If but all you have to do is you have to perfectly follow that money management. It's nearly impossible. If you know anything about trading, it's nearly impossible to blow the account if you follow that money management. If you know a little about trading, check it. If you don't believe me, check it. Tamimi, are you here? Tamimi or AFX, any of you are here? If you guys are here, just let me know that Apex has still the 50% discount or they have increased it. I have to buy two Apex account for my friend actually. He's in Bangladesh. He's unable to buy the account, so I have to buy two for him. Actually, not for him, for her. Just let me know if there is any better discount. Ah, shit. That should be the inversion gap, but as body has violated this, I can't use this as my inversion gap. I can't take the buy from there. If I could, then how would be the trade? Which one has made this inverse gap? This one. This candle has validated this inverse gap. I can't take this one because this bodies has violated this one. But if I go for this trade, stop loss will be 6 handle. Target will be that last parallel gap. Remember, this is not the inverse gap because these bodies has violated this gap. I have already explained the inverse gap. So please watch that video if you have any confusion. This is not that inverse gap. I'll look for buy. I can't look for buy from there. And as usual, it didn't work. From there, I'll go for the sell. Going to cover that order block only. Target is this sell side liquidity. This order block should not be violated right now. It reached until that week 50%. If you wanna see this here, that is the 50% of that week which has failed even to trade that 50%. which is a sign that market is bearish. I have this sell side liquidity over here, which has made this sell side liquidity much more stronger. I want to use this order block, the highest up close body close candle, which has traded this fair value gap as my order block. From that order block to until this sell side liquidity, stop loss is going to cover that order block only. No sell is valid until there is a 50-minute bearish fair value gap. I'm just going for those sells to show you the moving stop loss or trailing stop loss if you are going to go against your trend. So this order block is gonna hold the price until the strongest liquidity, this is the strongest liquidity, relatively equal lows, which are the clean lows, has made much more stronger over here by that specific candle. Order block should send the price for that sell side liquidity. It reached until this area, provided me the entry. Remember the breaker block entry, that was the breaker block over here. That is the breaker block. Mohawk reached until little above. I really didn't want to see this run, to be honest. Fall, perfectly fall, highest up close body close candle here. This is the order block. Trade that order block, propulsion block, come back again to trade this propulsion block or retest this breaker block over here, retest it, propulsion block, traded until the week 50%, made another order block, trade that order block, should take that sell side liquidity. If you want to go for short, you have to wait for a 15-minute bearish fair value gap. Without 15-minute bearish fair value gap, no entry is valid. This entry should be from there, okay? From there. Stop loss one tick above that order block. Target this sell side liquidity. Okay, it's still 50%. No worries. When they will provide us any better opportunity, I'll buy two accounts for my friend actually. She's a new trader and she's interested to trade through the Apex. I told her that it's difficult to pass the Apex account, but she's too confident. And she's a student for 3 months only. Okay. So, you can't argue with the girls. It's nearly impossible to argue with the girls. I just gave up. I just told her, okay, no worries. I'll buy two for you. But when there will be a discount, I'll buy two for you. No worries. Manu, no sell is valid if there is no bearish fair value gap. No sell is valid if there is no bearish fair value gap. I keep repeating this word. You only watch the winning trade. You don't want to see the opposite trade or opposite direction entries. It's not good, brother. You should watch both of them. This is a bullish market. I should keep looking for buy. Remember what did I talk about this order block here? This is the opening of that order block. It has the power to stop the price, send it higher again. I know that. Still, I'm going for the selling opportunity only, not buying opportunity. What you should do in this whole area? Nothing. You will keep watching this market. It is falling, you will keep watching them. Made this sell side liquidity, you will watch. Can it take that sell side liquidity? Not taking any entry over there. No entry. In the meantime, if you find any buying opportunity, you'll go for that buy. Because this is a bullish market. Market is respecting that order block over here. So you will start to look for buying opportunity instead of selling opportunity. All the sell from there to there, all the sell, you will let them go. And the way I showed you this sell side liquidity left over there, same thing happened over here. See, this sell side liquidity, market left that sell side liquidity over there. So history can repeat, market can keep going higher by leaving those sell side liquidity open here. It can keep going higher because this is a bullish market. And then around 240, it will go for this sell side liquidity, or maybe that sell side liquidity. We don't know, okay, where it will go. But after or around 240, it can go for them. Right now, this is a bullish market. You will only look for the buying opportunity. Every sell, you will let them go. Credit card under different name from the Apex account owner account will be banned. Okay, then it's gonna be a problem. I didn't know that. Okay, got stopped out. Didn't work. For taking buy, I need a market structure shift, which is here. There is a fair value gap. If there is a fair value gap or entry gap, that will be my buying opportunity, partial, until this line, because that is the area where market is now going for. Leaving this sell side liquidity maybe around the 4240. If it reverse, then that is gonna be the entry opportunity for the selling. Give me the market structure shift, entry gap, last gap, whichever it will make. If it makes just one gap, that is my entry. I will use this one when market is going higher, only this thing. Not going for the buying opportunity, I'll go for the sell only. Fair value gap, fair value gap, any of this fair value gap will be traded, that will be my entry for the buying opportunity. I should look for buy only. If you want to take a sell, you have to wait for a bearish fair value gap from 15 minutes. There is no bearish fair value gap, there is no entry. Not no entry valid. No bearish fair value gap, no sell is valid. Okay, then I wonder why you keep shorting. I guess, brother, you just joined now. Actually, at the beginning of this stream, I have this should be the partial, at least partial, or maybe the market will. I mean, stop loss should be to the break even. Any of them. Okay. From this gap, if it can come back again here, that will be my buying opportunity. Now, stop loss. The best area is below this low, which has made this breakaway gap. That is the best area. 8 handle. Okay, I guess it's not bad. Target this line, very specific line. Okay, actually I will go for the new line as market has made another breaker block here, there. Okay, so this is the minus 1.5, which is very near to the line or to my entry. That is my entry. This is my entry. Okay, over here I will look for minus 2.5 and minus 1.5. This will be my partial here. That will be the partial, that will be the target. This will be the partial. It's little above of that last parameter, but I believe that it will be broken. And that should be the breakaway gap. That means market should not close below the 50% of that gap. The best case of scenario, market will never come and touch that gap. That is the best case of scenario. What is the logic for this buy? Market came here to trade that order block over here, that 50-minute order block, then took the liquidity, failed to take the extreme liquidity, leave that open. History has repeated over there, gave me the market structure shift, entry gap, last gap. This is the only thing that can stop the price and send it lower again, but I believe that it will reach at least until this minus 1.5 standard deviation from our new standard deviation leg. This is our new standard deviation leg. This to this, body to body, minus 1.5. Sorry, it should be there. Minus 1.5 is the first partial. That minus 2.5 is the second, or the target should be there. That minus 2.5 standard deviation, that should be the target. In the meantime, it can give some kind of reaction from minus 2 standard deviation. So this is that area market should reach now by using any of this gap. Just I have to be careful about this gap. It can stop the price, send it lower again. So when it will reach to this gap, my stop loss will be to the break even. Because if it give me the reversal, I will get stopped out to the break even. That's all. Here I have the breaker as well. So this is the breaker block. I have the breaker block as well to this line. Just going to mark the body to body, not the whole week to week or something. If market fail to touch the 50% of that line, that means this line, or if body fail to close below that line, that is called kind of extreme bullishness. If market fail to close below this line or fail to touch that line, it's mean market is extremely bullish. I will expect the boom, something like that. But that boom will come around 2:30, exactly around 2:30, maybe around 2:29 or 2:30 or 2:31. Any of these three candles will give me the volatility. I wish that volatility will go toward the buy side because this is a bullish market. It is respecting that order block. So I will expect that boom will toward the buy side liquidity. In the meantime, if it make the Judas swing, which I am not expecting because the Judas swing should happen around the top of the hour. That means around 3, 4, 2, 1, around the top of the hour. If I'm bullish, the boom can go opposite direction. But 2:30 or the 30 of the hour should provide me the run toward my direction, not the opposite direction. This is the differences between the volatility around between top of the hour and the 30 minute of the hour. It is just wasting little time for 2:30. I believe that around 2:30 I will get that run. And that run, if it go toward the upper move up or upper side, then around 2:40 I will start to look for the reversal. So this is the candle. I want to see the move or the volatility by this candle. It's gonna be the worst thing if it can close below this line. That weak 50% is not important anymore because market has taken that low as well. I mean, even if it close above that weak 50%, it doesn't have any value. But still you can observe that weak 50% if it can work as a resistance. If it start to work as a resistance, I will trail my stop loss below that low. That means if it start to respect that line, then I'll put it over here around this area, around this area. Just that candle will close, I'll put my stop loss over there. I'll just put it here and then I'll move it if it has been respected. Wherever this candle will close, I'll put the stop loss below that candle. Now stop loss will be below that low, just one tick below that low, because this wick is now respecting. I don't want to see this will respect and send the market lower. I don't want to see that. So I'll put my stop loss over there below that low because it is also the breaker block. That is the breakaway gap 50%. Body didn't close below this 50%. Perfect. It should keep going higher now. At least it should close below this entry gap one more time and then tap to this entry gap, or without tapping to this gap, it should keep going higher. You can say why I don't give the market to breathe little bit. I don't want to do that because if I'm working with the precision or with the price action, then something I don't want to see which is going to send the market lower. If this market is really would love to go lower, then I will take a huge loss. I don't want to take that small loss for more reason. I mean any reason. So it should be safe over there because it has already traded everything. It doesn't need to fall for that low one time. If it fall, I'll get stopped out. I'll look for another opportunity to take entry. Otherwise, it's safe over there. It will make an unfilled fair value gap. I'll put it to the break even. It doesn't do that. It will keep falling. I'll get stopped out over there. Two things I want to see right now. First thing is the body close above this fair value gap. This is the first thing. The second thing is I want to see a fair value gap over here. That will be an unfilled. I can't move my stop loss. It's forbidden. I can't move it because this market can come back again to trade this down close body close candle. So I can't move my stop loss. Instead, it is safe below that order block now. Breaker block, order block. or the normal price action order block. Market has taken the liquidity, market structure shift, fair value gap, entry gap, breakaway gap. Here the lowest down close body close candle is the order block. Tap to this order block, should go higher and take the liquidity. Breaker block, I just marked just to the body, but actually to the top to the bottom is the breaker block, or all of these three consecutive candle is the breaker block. Either way, I just marked the body. Tap to this body, the lowest down close body close candle, which is the breaker block, order block. Tap to this order block. It should violate this last fair value gap, which has the power to stop the price. So when it will reach to this gap, my stop loss should be to the break even, because it has the power to stop the price, send it lower, and take that liquidity. I don't want to take that risk. So what I will do, I'll put my stop loss to the break even, and I will wait to see if it can go to my target without hitting my stop loss. No sell is valid until there is a 15-minute bearish fair value gap. I don't care how far that sell will go, but no sell is valid. It tapped to this last gap. See, stop loss should be to the break even now. Stop loss should be to the break even now. Either you have to close the trade, or you have to take the partial, or you have to put the stop loss to the break even. You will get a stopped out. I don't care, but you can't hold the trade for that stop loss anymore. I should not. Okay, not you, me. I should not hold the trade for that run until that low. It doesn't have any value, because this order block, this breaker block, everything has done their job when it has taken those highs. They have done their job. This high has traded this rejection block. Maybe. Oh no, it didn't trade actually. It was very near to that rejection block, but didn't trade. I thought that it has traded. But this last public is holding the price. I don't want to get stopped out over here. So I would love to put my stop loss to the break even. I'm just not moving it because I wanna keep it like that way. If the body can close above this fair value gap, I will put my stop loss below this candle. If the body can close above this fair value gap, my stop loss will be below that candle. It's too fast is trailing stop loss. Yes, sir, I trailed the stop loss like this way. This will be my stop loss. If the body can close. If the body can't close, stop loss will be to the break even. That's the rejection block. It can hold the price, send it lower. This body has closed above this candle, sorry, above this fair value gap. This will be my stop loss. In the meantime, I'll keep it like this way so that you can understand the differences between my trailing stop loss. It should not be violated right now before reaching to this line, which is minus 1.5 standard deviation. Remember, minus 1.5 standard deviation, that is that first partial level. As it reached to that rejection block, look at the time, 2:38. So around 2:40, it has the power to provide me the reversal. Before getting that reversal, I want to see it will at least respect that standard deviation. Instead of that rejection block, it will respect that standard deviation. That is my intention to see. Maybe. What a question, man. No, I wanted to close it around 11:30, but to be honest, when the morning session depressed made me depressed, it didn't provide me the entry opportunity. I was interested to touch that PM session as well, because PM session should be provide me the entry opportunity, and every buying opportunity you will see that it will give you at least the profit you will get. Until now I got. So let's see if this rejection block can be broken or not. See this rejection block, that line is the rejection block. Bodies are respecting this rejection block. So if it can be broken, then this partial is obvious, that is minus 1.5 standard deviation. Why I care about this rejection block? Because of the time, 240, a perfect time for a reversal, a perfect time, trust me. So that's why I'm worrying about that rejection block. If it was not 240, I wouldn't give a shit to this rejection block. I would hold my trade until the standard deviation. As it is at the 240, the time, I will move my stop loss over here, and I'm very much careful about that rejection block. I cooked the fish and the flour. What is that flour? I forgot the name. I cooked it, but I think I will use the banana and the milk and the rice only altogether. It's too tasty. Look, market is struggling, okay, to decide what it wants to do right now. Should it trade that minus 1.5 before falling, or should it fall now because the time is telling him it's time to fall? 240, around 240. Not exactly 240, but around 240. In a bull move, you will expect the bear run around 240. So this is the area where market can reverse, and I'm observing that rejection block only. Can market close above that rejection block? If it failed to close above that rejection block, it can start to reverse now. So my stop loss is here. If I get stopped out over here, I'll think about the selling opportunity only. Got stopped out, done. I just put it over here just to show that maybe it will work like that way. But I love to get stopped out because of the price action and the time. So around 240, I always expect the reversal. I'm not saying any of you to look for sell, but I'm saying just observe it. Can it fall now? At least for this sell side liquidity and for more sell side liquidity. It is the time to fall. Cooked, not fried, cooked. And this one is I'm going to remove because I got it stripped out here. Write it down to your notebook. In a big day, either if it is a big bear day or if it is a big bull day, any of these days, if you see the whole day market is bullish or the whole day market is bearish, around 240, you will always respect or you will always predict the reversal, not reaction, reversal. Not always, most of the time. Around 240, okay, not exactly 240, but if it is around 240, as you can see this candle around 239. If you get that around 240, that is the perfect, okay, that is the perfection. But if you don't get it around 240, but around 240, you will always expect the reversal, not reaction, reversal until certain liquidity. This is the only sell I'm going to take according to the price action. Until now, I didn't take any sell. No sell was valid just because of there was no 15-minute bearish value gap. No sell was valid. So this is the first time I'm going to take the sell according to the time and price relationship. Stop loss is above that candle. This candle has validated this, not a perfect inverse gap, but still this is an inverse gap. Not perfect one, okay, to be honest, because this should be the perfect inverse gap. If this candle wouldn't violate this gap, then this could be the perfect inverse gap. Still, I'm just trying to force the market to make it as a inverse gap. So this candle is the first candle which has traded this gap. This is the first sell I took according to the price action and the time theory. So I'll take a partial over here around this area to the rejection block. I'll try to take a partial over here and hold my trade for that sell side liquidity. Until now, there was no sell was valid without a 15-minute bearish fair value gap. No sell is valid. And please take this note because you are not going to get this information from anywhere else. If it is a big bullish day or if it is a big bearish day, you will always expect the reversal, not reaction. Reversal around 240. Around 240. Not exact 240, but around 240. and you are not going to get this always, but 90% of the time you will get these things. Trust me. In 2 minute chat, I didn't cover this last parallel from 2 minute chat because I don't want to see it will tap to this 2 minute parallel gap, which should work as a breakaway gap. So I didn't really care about that last gap. All I care about this gap. From 2 minute chart as well, there is a very small gap, but until this gap is my interest. If market would love to go higher, it can reach until this gap. But eventually, these lows are my target here. And here from the 2 minute chart, I have a very nice unfinished business over there. That is my target. When this candle will reach until this line, I'll put my stop loss to the break even. If it can reach to this line, either way, if it close below this line, it's okay. If it touch that line, it's okay. Either way, it will reach over there. I'll put my stop loss to the break even. Market never leave this type of clean lows. It doesn't like that type of clean lows. Why I put my stop loss to the break even? Because this 50% of that we can hold the price, send it higher. I don't want to get stopped out over here. By that rejection, it will stop me out over there. I don't want to digest that loss. Instead, I will get stopped out here. I'll try to take re-entry. There's nothing wrong to take re-entry. So I'll better take a re-entry before getting stopped out over there. So my stop loss should be over here, safe, because that fair value gap is going to stop the price. In the meantime, that not the perfect inverse gap, but still this is the inverse gap. So both of these thing is going to hold my trade safe and sending it at least for that rejection block, and then finally this clean lows here. Right now market has made another clean lows. They should be taken. I wish that it will take that before stopping me out. That's all I wish. By the way, this inversion gap is valid or perfect from 2 minute chart. So from 2 minute chart, this inverse gap is a perfect inverse gap. I mean, let me show you this. If you take a look over here, market went higher, tapped this gap, take that buy side liquidity again. Has taken over here. Closed below this gap. Stop loss should be safe above that candle which has made this inverse gap. Trade that inverse gap. Don't nobody closed above the consequent crossment of that inverse gap from 2 minute chart. It should fall for the sell side liquidity, which is right now around this area. This is the sell side liquidity. It should come for that sell side liquidity. I just wish that I don't get stopped out before market falling. I can get stopped out, and in that type of situation I'll look for re-entry, but not interested to put my stop loss over there anymore. I should do it, but as it is a bullish market, I'm using that time theory. I can't take that risk. So I will better put my stop loss to the break even, then I'll try to take re-entry in this area if I get stopped out. This is the first sell I took depending on the price action. 241. No, they are not the order block. I mean, this is just an indecisive candle. So I don't see this one as an order block. So got stopped out to the break even. I'll look for the re-entry opportunity if it provide me any re-entry opportunity. Otherwise, I'll just let this go. It will keep going higher now. It is also possible, but for that, I need buying opportunity from there. In the meantime, it has to break this gap. If body can close above that gap, then come back again to this gap. That is a buying opportunity again because this is a bullish market. So around 240, the retracement or the reversal reached until this area. Body didn't close above this parabolic gap. I'm not interested to take the buy. Instead of that, I will keep looking for sell. If that candle body can close above that high, this would be my buying opportunity from there to until the all-time high again. As it didn't close, instead it has been respecting this fair value gap. If this candle can close below this inverse gap one more time, I'll take re-entry or resell depending on that same price action for same low, same sell side liquidity. It will close below this gap, I'll go for that sell. Why I'm taking the resell? Because I knew that I'm trailing my stop loss to the break even because I don't want to get a huge loss. That's why I trailed my stop loss to the break even. Now I will take re-entry as it is respecting this price. If it wouldn't respect it, I wouldn't go for the sell. If it was violated, I would go for the buy instead of selling. Right now, to take a decision, I need two things. First, either body close above this fair value gap or the body close below this fair value gap. Any of this thing happen, I'll go for the trade. If the body close above this fair value gap, I'll go for the buy from this order block. If the body close below this fair value gap, I'll take the sell from that inverse gap again. So the thing will happen first, I'll go for that. If it come back again to this high of this fair value gap, sorry, to that candle, I'll go for the buy from that order block. First, body has to close above that line, that fair value gap. Body close above that fair value gap, tap to this order block, I'll be in the market. If it doesn't come back, it's a different matter. That means it didn't provide me the entry opportunity. That's all. Need the perfection. Exactly, it has to tap to the order block. If it doesn't tap, okay, now I'm in. Okay, I should be in. I don't know. I mean, now I should be in the market. Stop loss should be there. That should be the first partial. It didn't take me. I don't know why. Over trading, gambling, gambling. Brother, did you subscribe and then wait for 5 minutes? I guess 5 or 10 minutes. I don't remember. Just to comment this. But thank you so much. I don't know why it didn't take me actually. It should take me. That is my buy limit. It should take me over there until this level and then that level. Stop loss is just going to cover that order block. That's all it is going to cover. I'm not interested to see this gap is going to hold the price or it is going to provide me any kind of reaction. It should not provide me nothing. It should just go like there is nothing. This market should keep going like there is nothing. I want to see like this. Okay, it will just go through this simply. Yeah, like this candle. The way it is going, I would love to see that it will go like that way. And it is simply it will close out that fair value gap and like there is nothing. It will go like that way. 176 likes. Are you kidding, man? Awesome. 900, sorry, 9122 subscriber. Use. I don't know why it didn't take me. Okay, it should take me actually. It came two times over here, but didn't take me. It's okay. So far, I remember ICT talked about this volume balance. It can be violated by the body. There is nothing wrong. Body can be violated by the volume balance. That means body has closed below this volume balance. There is nothing wrong with that. So far, I remember. I really don't know how to use this volume balance to be honest. Even if it doesn't flash, no worries. But this line should be traded. That is minus 1.5 standard deviation. That should be traded at least. Even if it doesn't go too far, no worries. I have no problem with that. But that line should be target. I mean, should be touched. It tried over there, failed. It should touch that line, even if it doesn't flash. Just my opinion. I can be wrong. I love to be right, but I can be wrong. I hate to be wrong. I hate to be wrong, but I can be wrong. Nobody can beat the market. Whoever tried to beat the market, he got beaten. That is minus 1.5 standard deviation. That's why I want to see that it will reach at least until this level. And then if it can violate this level, then this is the next level market should reach at least until that level. So that is my intention to see right now. Can it go over here? The way it is respecting this last parabolic curve, that is unexpected. This is the last parabolic curve over here. As you can see, it is respecting. I don't like this one. This thing over here, I don't like it. I want to see it will go through this speed. I'm all interested about this line first, so that will be the partial, then that line. That will be my target. That's all I'm interested right now. First thing is a body close above that line, which is the rejection block. Here, a perfect rejection block. So I want to see a body close above that line. If it can close above that line, this is the next level it is going to touch. After touching that, I will see the same thing. If the body can close above this line, I will look for that line. That market will go for that line. Now I want to see how the body is going to close above that line. Is it close above that line? If it close above that line, I would love to see that this market will come until this line. That is the next line market should reach over there. This will be the partial, then hold my trade until the minus 2 standard deviation. There the standard deviation, very strong, brother. Wanna see this will work as a support now. That's that first partial line, which is the minus 1.5 standard deviation. I wanna see it will work as a support now and reach the market until that line. In this type of situation, my stop loss would be just below that candle. here, one tick below that candle. After taking the partial, okay, that will be my stop loss. The candle has made this unfilled fair value gap. I should put it just below that unfilled fair value gap, but sometimes we did the damage. I don't want to get stopped out over here. I'll put my stop loss below that candle which has made this unfilled gap. And I'll expect that market will go for this line dramatically. I mean with the speed, as it has closed above the minus 1.5 standard deviation. If you remember the 50% of these two line, that can provide me some kind of what to say, I mean the reaction. This is that line that can provide me some kind of reaction. That line, this is minus 2 standard deviation, which can provide me some little reaction. So if there is something unfinished, it can reach until that area before going higher again. Body close above that line, this is the next obvious line the market should reach until that line. Body close above that line, stop loss will be below that candle here. Actually here, not there, here. But body has to close above that line. Just put my stop loss below that line. There is a gap, a small gap. That gap can be traded before going for that line. This gap can be traded. So covered that gap only. This gap. In the meantime, I'm not moving this, okay? Just think like this is at the break even. Just think like that. It is at the break even. I'm showing you the way I trailed the stop loss, and actually you should do the things the way you love to do it. I love to do it like this way. This line is minus 1.5 standard deviation used as a support. It can come back again for this line, make it support, but I would wait for that if the body fail to close above that line. If it fail to close above that line, my stop loss should cover that minus 1.5 standard deviation. As it has closed above that line, I am going to cover that fair value gap only, that it will hold the price, send it higher again for that minus 2.5 standard deviation. If it doesn't do that, I'll get stopped out over here below the candle which has made this fair value gap. It didn't take me, okay, as it didn't take me here two times. I'm just showing you by this tool. Body close above that line one more time, stop loss is gonna be below this candle, this down close candle. Before stopping me out, if it can close above that line one more time, okay, I got stopped out over here, okay, I'm already stopped out. But now look at over here, if you put your stop loss to the break even, then how it is going to work? Because some of you start to think that okay, I got stopped out and lot of things. This is my money management. I don't refer any of you to follow this. Please don't follow it. Only my trailing stop loss. Don't follow it. It's disaster, brother. I love to work with the precision. That's all. This candle go one tick below that candle which has made this parabolic gap. This is what I don't want to see. It should not go below that candle if it really would love to go higher. It doesn't need to go below that candle. What is the last line this market can fall until this unfilled fair value gap? This is the last line market can fall before reaching over here. Tap to this minus 1.5 standard deviation. Remember, this is the minus 1.5 standard deviation. So let me mark it like that way. 1.5 SD. It can use this 1.5 SD as a support before reaching for that minus 2.5 SD. 2.5 SD. It can be used as a support. I just kept this thing over here just to show you if I don't trail my stop loss, how it is going to work. But I love to trail the stop loss. It's my problem. I can't think that this market came until this area. Now it will come back again and stop me out to the break even. I can't think like that way. And I won't be able to do this in my live money. I can't do that. So what I do, I actually trail my stop loss too fast. Then I look for another re-entry opportunity. I always do that. But I just kept it over here to show you that if I don't do that, how many times my target get hit. Came here to that minus 1.5 standard deviation, made it as a support. Can it keep going higher now? Today's session is based on standard deviation. So if you focus or if you are interested about the standard deviation, watch today's live carefully. Forget about everything else, just focus on the standard deviation. How every time I marked them, how market respect those levels, everything, okay? How I talk about the body close above those lines, everything. Just focus over there. You will get a lot of information about the standard deviation by today's live. Is that fake breakout? I don't know. I have to get the confirmation. Another body close above that line. That is the confirmation of the fake breakout. It can be the fake breakout. Look at minus 1.5 standard deviation. Either way, they are very strong level. You can use as a support and resistance. They are very, very, very strong. This is not the first time, right? I've showed you all of this fall and buy. Fall and up. How I used that standard deviation and how it has respected. You should give the priority 3 level: minus 1.5 standard deviation, minus 2.5 standard deviation, and the 50% of these two standard deviation. It can provide you some kind of reaction until some kind of unfinished business, not the reversal. Reversal I expect from there and there. Any of this level has the power to give me the reversal. It fall until this unfilled gap. Look at the body close. How the body has been closed. Where did it close? How did it close? Watch over there. When it respected that area, how did it respect that area? Fake breakout happens. How did it respect from that area? Reaction until this gap. What it should do right now? Boom. But that boom can come around 3:30. I mean, it can spend four more candle here before before expanding higher. I mean, it doesn't need, but it can spend little more time over here just to reach until 3:30. Don't forget about this, that reaction or reversal around 240. Sometimes this is actual reversal. Here it was just a reaction, but most of the time it's a reversal. So if you would love to look for sell in a bull market, or if you would love to look for a buy in a bear market around 240, the first opportunity you will get, you will go for that. Please look these lines carefully. Please look those lines carefully. How they are reacting. Fake breakout, confirmation breakout, hit target. I mean, that target will be hit. Fake breakout, market is holding that 2 standard deviation. It can work a lot of time over here before breaking this minus 2, I mean, sorry, minus 2 standard deviation. I don't believe that this standard deviation will stop the price, send it lower. It doesn't have that power. So I don't believe in that. What else can happen? It can take the time until 329, 330, 331 to reach for that minus 2.5 standard deviation. It can spend a little more time over here. Guys, if any of you are interested about to join our Discord, don't forget to join. In the pinned comment, I have just attached that Discord link, and it's for free. Okay, so if anyone would love to join us, please join us through that link. One more candle will close above that line. Fake breakout, confirm breakout. Confirm breakout, next level. This is that next level. Still the body didn't close above that line. Just look at the power of this random line. See this power of this random line and that random line. I just marked them randomly, right? Look at the power of them. Hey Jerry, how are you? Would you get long 810 area? 810 area. No, not from there. My long opportunity is only here. That is the only opportunity to get the long. From there, no way to look for the long. So please take a look over here, that minus 2 standard deviation, how it is holding the price. If you are bullish, you don't want to see this. You want to see this is going to be broken if you are bullish. So this is that 330 candle. Let's see if it can provide the market higher by this speed or not. Come back again to this minus 1.5 standard deviation. Still I'm okay. Made it one more time support. Can it go higher now? Because this is holding the price. I don't want to see this is gonna hold the market. If it was it was minus 2.5 standard deviation, I could say that okay, maybe market will fall now. As it is not minus 2.5 standard deviation, I'm not happy to see the reversal from that line. Just a reaction is okay, but not the reversal. You took the standard deviation from the breaker. Yes, sir, I did it. Going out of my mind. Temporary, it's okay. What did you say, brother? Going out of my mind. Temporary, but it's okay. I guess you're late, Jerry. I am talking about those lines from the beginning of today's stream. I mean, about how to use the standard deviation. I'm talking about them from the morning session today. So 109 people are watching, 179. If any of you didn't push the like button, please don't forget to push the like button, please. Just need 21 more likes to get that 200 likes today. That was the last line I told that market can fall. That is the last line. This can work as a support. I told that. This time market should go through this line with speed. I mean, it should not waste time here. It should not do that. If it is bullish, it should go through this one right now. Exact speed I need, because now it has made a bearish gap. I don't want to see this gap is going to hold the price, sending it lower. I don't want to see that. This low has taken all the liquidity. Liquidity has been taken already. It should keep going higher now. Today's whole day I talked about the standard deviation so that there can't be any kind of question about the standard deviation. Today's whole day I keep talking about this deviation. How to use them one after another, one after another. Not just one time. Every single time. I keep looking or talking about them. Look at the time, brother. What you are expecting right now, the time is not going to support your idea, brother. Okay? The time, you don't have the time. Because market is at the end of the time. Look at the body close, where the body has been closed. See, it is struggling to break either minus 1.5 standard deviation or minus 2 standard deviation. Any of them should be broken. I wish it will break that minus 2 standard deviation and reach for minus 2.5 standard deviation. That should be work according to the standard deviation. Except the time. If the time going against me, maybe I have to give up. Otherwise, until 345, I wanna see that market will break this minus 2 standard deviation. One body has to close above that line. Then this fake breakout is gonna be confirmed breakout. Then market is coming over here. I don't want to see any body close below this minus 1.5 standard deviation. Though I have this unfilled fair value gap, I truly don't want to see body close below this line. If it is closing below this line, then it's gonna be difficult for me to hold this trade. It closed below this one, maybe it's gonna be difficult for me to hold this trade because it was perfectly supporting this whole idea, that minus 1.5 standard deviation. The good news is that fake breakout, if it can make it over here, because history repeats, the fake breakout, one candle close above this line, the next candle close below that line, same thing. One candle close below this line, perfectly closed this unfilled fair value gap, should look for a breaker block over here. In the meantime, I want to see another body close, that candle close above that line. Then I can use this one as a fake breakout and market will still keep going higher. It didn't close above this candle wherever the market is, maybe I will get stopped out long time ago. I mean, you saw that I got stopped out when market closed one tick below that low. I got stopped out over there. But in the meantime, as it is at the break even, I am not confident that market will go for that minus 2.5 standard deviation by today. But as it is at the break even, the stop loss, I'll let this go if it can go over there, or if it failed and stop me out over there. That's all I would love to see, because there is a possibility to make the breaker block for going higher again. But the time is not supporting me. It's already 3:36, 15:36. So I'm not interested to look for that anymore. That market will go higher or lower. Maybe it is going to reset right now after that whole day bull run. Now it is gonna reset. Will come little lower and then close over here somewhere. This whole concept has been collapsed when this run happened over here, because previously it was respecting this price, so I had the opportunity to reach until this area. I was so much confident about that. Now I'm not confident enough, so I would get stopped out. As you can see that below that candle, when it has made this parabolic up, I wanted to see it will go through this and it will reach for that 2.5 standard deviation. I'll get it stopped out over here, because I really don't like this type of things when it doesn't work with the precision over here. I don't know how it is going to precisely work later. So I don't love to hold the trade for so long. Instead, I get stopped out in a logical level. But in the meantime, whoever actually love to hold their stop loss to the break even, like the ICT do or some other guys do actually for some run, I don't know. Uh, yeah, it's okay to put the stop loss to the break even after taking the partial. Remember, that was the level I talked about, the partial. That should be the partial level. When this unfilled Fable gap has been filled, I need to look for the breaker block. That's all I need to look for. Thinking about that standard deviation. Netkit, I talked about standard deviation. I showed how to mark that standard deviation. I showed how to predict that standard deviation. Every single thing I talked about by today's live. From the beginning to until the end. The whole day. I keep showing you the standard deviation. How to mark them, how to go for them, how to use them. From daily chart, from hourly chart, from 1 minute chart, from 2 minute chart, lot of area. Okay. Fahim ICT. You wanna you wanna look for a downside move? I don't want to see any downside move actually. I wanna see it will keep going higher a little more. I mean, until 4 it will be bullish. I wanna see like that way. But it can obviously do the reset, but I don't want to see that reset. I wanna see it will keep going higher. The way it has left that buy side liquidity over here, I wanna see they will be taken. They will be taken, and then market will reach for that minus 2.5 standard deviation until that line. We'll go for that. We'll see. Okay, we'll see. It's the end of the day, so let's see if it can reach for that line I am talking about from the beginning of this trade, at minus 2.5 standard deviation. Yep, price has traded the 50-minute bullish parallel gap. I saw that. Just tap to this bullish parallel gap. Can it send the price higher again? I didn't say that you are wrong. I just told that I want to see it will go higher. You are expecting about, I mean, according to the price action, maybe you are expecting that price will fall. I'm expecting price will go higher. So this is two expectation. I didn't say you are wrong. I didn't say that I'm right. I just told I don't want to see market will fall. I want to see it will fall. It will go for that minus 2.5 standard deviation. That's my intention to see in this market. If it fall, 100% it can fall, brother. There is nothing wrong for falling. I don't want to see that fall. I want to see it will reach for that line. I didn't see that you were wrong. Okay, by the way. Yes, sir. Tomorrow is my bullish, obviously my bullish bias, and I will look for that line. Until this line, I'm bullish now. I'm extremely bullish until that line. After 345, no entry is valid for me. I don't want to. I never push the button after 345. Even if I'm in a trade, I love to close the trade around 349, or at least put my stop loss to the break even around 349. If it is bearish now, there is nothing to do. Okay, it's already 345, almost 345. So no way to trade for me. I'm done for the day. It's the closing time. 4 p.m. is actually the closing time of the New York session. Around the last hour in a big bull day, the last half an hour can be some kind of retracement. If you go to the daily chart, you'll understand what I mean to say. This is that daily chart, okay? So let me remove them. Look over here. This is that daily chart. This is today's chart, I mean today's candle. So it can make the reset. That means open, open, manipulation, expansion, then it will fall little bit and then close over there. Something like that. PO3. It can happen right now. I don't want to see that is going to happen right now until 4. I don't want to see that. But if it do that, I will have no opportunity to take the sell because of the time. 345. No sell is valid if there is no bearish five lookup from 15-minute chart. It's something very clear, very clean. I don't know how can I make it much more cleaner. No sell is valid if there is no 15-minute bearish five lookup. If there is a 15-minute bearish five lookup, go for that sell. If there is no 15-minute bearish five lookup, no sell is valid. I don't know how beautiful the setup will be or everything will be. I don't care about them. But I will not take any kind of sell if there is no 15-minute bearish five lookup. Okay, is that clear? And I don't know how to trade the Asia session, brother. to that lower standard deviation. This is the line. I want to see if this line is the target or not. So from that to that, high, sorry, low, low, high, low, higher, high. So this is that leg, this is that standard deviation line. Can it reach for that line before expanding higher again? This is the price action from Dow. No clean price action, by the way. This is the CPI run, and market was bearish, whole day it was bearish. Where the mini S&P is bullish, Nasdaq is bullish, and this guy was just consolidating. So it should go for the all-time high again, which is over here. When Nasdaq has taken that all-time high, this Dow should go for that all-time high. This guy should go for that all-time high, and Nasdaq will keep supporting their logic for that all-time high again. So this is the dollar index. I wanted to see that it will go through this all, but it didn't do that. Instead it come back again to take that obvious liquidity. This was relatively equal highs which has taken over here by a shallow run, which is made the obvious liquidity. It came here, didn't take that obvious liquidity. I believe that it will take that obvious liquidity before falling again. So it will take that obvious liquidity, trade that gap the way I explained in the weekly analysis video. Please go for that. It will take them, then it will fall. That is my first intention over here by seeing this what is, I mean, this dollar index. This is the Nasdaq, and for the Nasdaq, I don't want to see that market will fall or come too far to make the kind of retracement or something. I want to see that market will reach for this line first, then it will start to fall for correction all of these gaps. So it has made one, two, three gap, lot of gap over there. So I prefer that market will reach for that line tomorrow, then it will come for the correction. So from that line to look for that correction, maybe for this sell side liquidity, that sell side liquidity. Below this sell side liquidity, I have this parabolic gap. Below that sell side liquidity, I have this parabolic gap. So any of this parabolic gap will be my target tomorrow after trading this line. If it fall for first, I will let the all fall go. Then I will expect, or I will try to predict the run toward that line. So this line is my interest. I'm not interested about fall. If it started to fall, I don't know how far it will fall. So when I don't know that, I'll look for that line first. If it reach until that line, then it can fall for too long. I don't know how far it will fall. This is the price action I explained in the my weekly analysis video. Please watch that video. Please one more time, please watch that video. From that line, dotted line, that it will reverse until this hourly gap. After reaching to this gap, it will go for that all-time high and for minus 2.5 standard deviation. This is the thing I explained in my area. Today was CPI, only buying was valid. No sell is valid in this market. No sell, not even a single sell is valid because there is no 15-minute bearish parallel gap. You should keep looking for buy, and the buying opportunity will come if and only if there is some kind of manipulation. That means market has made relatively equal loss, it has taken that loss, then it has provided any market structure shift or any kind of edge opportunity, you will go for buy only. How long you will look for buy? Until that line, or around 240. Until around 240 you will keep looking for that buy until this line. Market doesn't reach until that line, you should keep looking for buy. If you take a look over here around this area, so this was the first presented gap. According to our analysis, we are bullish and first presented fair value gap has provided us the buying opportunity. That was the first entry opportunity. All this run, I have nothing to do, nothing to do, nothing to do. Then finally market fall here. Took that liquidity, market structure shift, fair value gap over here around this area. First opportunity to take the buy. If you take that buy and get stopped out over here, you will start to look for another buying opportunity. And as I can see, there was the buying opportunity from that breaker block around this area. If you don't know how to take this entry, just you have to let that go. There is no other opportunity over here. Then next time, this is the second time market has taken that liquidity. This is the second time. So first entry, it can be a losing trade. Okay, so you took that entry over there. Maybe you got stopped out over here because you covered that breakaway gap or something like that. You got stopped out over here. Then market fall again, took this liquidity, failed to take that on, and it didn't provide you any entry opportunity over there. I don't see any entry opportunity over there except that breaker block entry, which entry I outlined. Remember this entry I outlined from there. So that is the next entry opportunity until that minus 2.5 standard deviation. It has provided me that run. This is the second time market fall, took the liquidity, but unfortunately this is inside the lunch hour. I framed that buy as well. Inside this lunch hour, no entry opportunity is valid. Nothing until this lunch hour. So around 12:50. So this is the 12:50 candle. That is the 12:50 candle. I want to start to look for some kind of buying opportunity again from 12:50. It fall again, took that low. It has taken that low, failed to take that low. The same thing history is going to be repeated over here. Failed to take that low, take that low. This is the liquidity taken inside the session. Then market went higher, gave you the market structure shift, entry fair value gap, breakaway gap. Over here, this is the breakaway gap, entry fair value gap. Tap to this entry fair value gap one, two, three times, expand higher again. Fall again, no entry opportunity, no entry opportunity until this area. There is next entry opportunity over here around this area. Market took that liquidity, market structure shift, fair value gap, take the entry for the buy again. I didn't want to take the buy from this fair value gap. I was talking about this, but I didn't take it because I wanted to make sure that this gap is going to be broken. So when it is broken, then I wanted to take the buy from that order block by covering that order block only. So it tapped to this order block. There was that minus 1.5 standard deviation, the partial area. I would love to hold my trade over there and I will get stopped out over here around this low as you have seen. Minus 2 standard deviation has provided the reaction. How far it will go, I don't care about this market anymore because it is already more than 345. After 345, no entry is valid for me. In this day, if you say me that it's not a good price action, I'm not agree with you. Yeah, it didn't provide you some entry opportunity from long lot of area. It didn't provide you the entry opportunity. But if you keep looking for buy, I believe that the first entry which is over here, that will be a losing trade. Otherwise that, I don't think so there is any losing opportunity. Every single time this breaker block entry opportunity, here this is another entry opportunity, the same logic over there, another entry opportunity. Where was that? Around here I guess. Here another entry opportunity either from the breaker block or from the fair value gap, whatever you say. The third entry opportunity. So your first entry will be a losing trade. I'm sorry for that. And then you won't be able to even mitigate your loss over here, I guess, if you don't know how to use the breaker block. Then this entry and around 1240, this entry, they will provide you the perfect opportunity to mitigate your loss. If you miss them as well, then the last opportunity was there around this area. When market took that liquidity, failed to close below this constant crossman, gave you the market structure hit, fair value gap, tap to this fair value gap, keep going higher. As I told, I wasn't confident to take the entry from this order, fair value gap. I wanted to take that entry from that order block. So from that order block to until that minus 1.5 standard deviation. I believe that it's clear to all of you. If any of you love to take the sell today, you're gambling. Don't take the sell. I keep looking for the sell today. Every single time there was a perfect setup. I pushed the button. I got stopped out. Every single time I look for the sell. I don't know how beautiful those sell are. What was that? I guess here. How beautiful those cells are. It didn't work. Now you can say that you got stopped out because of trailing stop loss instead. Yeah, I mean, still it didn't reach until the liquidity level, right? That was the liquidity level. It didn't reach until that liquidity level. So if I wouldn't get stopped out here, I would get stopped out here, or maybe here because that was my target. I would. It never hit my target. Not even a single cell is valid for today. Everything you will look for the buy only, just the buying opportunity. I did all the selling pushing just to make sure that if you think about that market is now going to fall, even after seeing all of this run, if you get frustrated, that is the wrong thing you are doing. Don't look for that. If you'd love to look for a sell, you have to look for a bearish parallel gap. There is no bearish parallel gap from 15-minute chart. No sell is valid. Not even a single sell is valid. Every single time, go for the buy. Remember that buy. Yeah, I got stopped out here just by one tick because of my trailing stop loss. I trailed my stop loss too fast. It shouldn't go for that below that order block. Below that order block, it went one tick below that order. I got stopped out, but my stop loss was below this line. Remember, just below that line. That was my entry there. Stop loss was below that line. Then I trailed my stop loss. That was the buy. Worked perfectly. That buy worked perfectly. In this area, that buy worked perfectly. Forget about the sell. No sell is valid. So forget about all the sell. Just look for the buy. Buy, perfect buy. Buy, perfect buy. Sell, sell, sell. Forget about them. Buy, perfect buy. Below here, around this area, sell. Don't worry about that. Sell. That is not valid. That buy, that was the only buy, didn't work today. According to the price action, it should not actually fall. I got stopped out over here to the break even. You can see here I got stopped out over here, took another buy from there depending on that body close above this parabolic up one more time. This two time I got stopped out over here. Then finally market has provided me this entry opportunity. If you remember, I used that thing, that candle. It was there. If you don't remember, until the standard deviation here somewhere, I don't remember what was the standard deviation. Rewatch the video if you are getting confused. Forget about every sell. Think about only the buy. Selling is valid. I cleared that lot of time. I'm gonna clear one more time. Without a 15-minute bearish parabolic from 15-minute chart, no sell is valid. I don't care how far this market will go and how it will go. I don't care about that. All I care about buying opportunity. Without any kind of bearish parabolic gap, I don't want to look for sell. I just don't want to look for sell without any bearish parabolic gap. Now, if you say this is a selling opportunity, I can take thousands buying opportunity with this type of move. Like this small move, I will get 1000 buying opportunity. Just randomly, I will keep taking buy and it will provide me the winning trade because this is a buying day. Trend is my friend. Every single time it will take the liquidity, it will provide you the entry opportunity. Except this first one because it didn't work, to be honest. What was that? Yeah, there. That didn't work because I really wanted to see it is going to be working. I mean, it has taken this liquidity, perfectly traded that area, failed to close below this low or below this candle. I wanted to see it will keep going higher, but this run actually stopped me out over here. That is a small run was unexpected over there. Hmm. And the first presented gap, you have got your 25 handle actually from there until this area we were actually outlined that on. I didn't push the button from the first presented gap. That was a very nice. I mean, our direction was bullish and first presented gap has provided us the buy run. What do you need more than that perfection? Okay, guys, the whole day today I talked about the standard deviation. If any of you would love to interest about learning standard deviation, please go for that. You have to watch that one as I am here for maybe 7 to 8 hours talking about this price action. Clean lows, market never leave that type of clean lows in the market. It never leave them because they're clean lows, like tick by tick. Remember that clean highs? What was that clean highs? I don't remember. What was that clean highs? There was somewhere some kind of clean highs. I told that it can't be over there because it should be taken. clean lows, clean things, market never leave them open, never ever. When it is going to take it, I mean, all of this sell, you will move, I mean, you will lose, I mean, you will miss that loose fall. Because, and if you think that just one sell is going to determine your whole day, I'm gonna argue with you, because I don't know what to say. I mean, because this is the end of the day, out of session. You are not able to catch that sell, or I mean, whatever it is. You should not catch that sell. It is outside of the session after 3:45. The last macro has end around 3:45. Then this market will do boom, boom, boom. Thank you guys for being over here. And yeah, if you get something from here, don't forget to leave the like button. And if you are new to our channel, don't forget to subscribe to our channel. After watching today's stream, I believe that you will never, never, ever take the counter trade entry in a bullish market or in a bearish market without the confirmation from the 15-minute chart. If you still don't get the message from this stream, I feel very bad to you. I feel very bad about you. Remember, 15-minute bullish or bearish marble cap is only thing to take opposite entry. Thank you for being over here, guys. And yeah, tomorrow we'll see. We'll look up. We'll see tomorrow. Okay. Until then, cheers, guys.